All right, gonna repost the show. Well, the good thing about this go around is it's nice to have another person to get started. You know what I mean? Because like when it's just me and like the internet's like shaky, I'm like, can anyone hear me? It's nice to have someone here. All right, I think eyeballs are starting to come in here.
I've just posted it as well, bro. What's up, everyone?
All right, I think I'm all good on my end. All right, I got this other screen here in case I have to screen share. But ladies and gentlemen, welcome back. We got ryQuant broadcast episode 7. I know I missed a couple weeks, but hey, I moved across the country. You know what I mean? I went to New Mexico, got a war dog. There's a lot going on here, a lot of moving pieces. I won't bore people to death with the details, but even just for us to do what we did today, like myself and the dog, 2 sessions, we ran early this morning and then like we ran on the beach, like we ran in the neighborhood, ran on the beach, getting that done and a couple chores and errands and like eating a meal, feeding the dog. It's already 8 o'clock at night. And then it's like I'm meeting up with Bit Strategy at 9. So it's really been like one chore after the next. So I do apologize for the lateness, but this is kind of as real and authentic as you can get. It's over here. The food's over here. The food's over here. Hey.
Bro, those morning beach runs that you've been doing, is it the morning you get out there to the beach, or do you do that in the evening? But it looks amazing, bro, either way.
So you kind of got to work around the weather. You know what I mean? That's kind of the big answer there. I like to avoid, certain winds or try and like navigate the rain as best I can. I like us being out in the rain. Like when it rains, we're going out there because
that's a vibe too, isn't it?
Little Miss Princess over here is a little like, hesitant on the water. So we got to break through that. But yeah, so all I was saying there is sorry, apologies for like running late. I really do want to get like one show out a week. Honestly, sometimes 2 shows out a week, but it's like I was talking with Bit Strategy earlier. It's very normal for like creative people to like, need to reset. Like life is very much an oscillator of highs and lows. And I think creative people are the most aware of this, that there's going to be like once a quarter, I'll sleep for like 2 days. I don't know when it's gonna come, you know what I mean? But like once it hits me, I'm like, all right, whatever day of the week it is, like we're racking out. Also, once a quarter, I'll eat 6 meals in a day. You know what I mean? It's like life has these like ups and downs. There's a time to rest. There's a time to work. Like when the creativity is flowing. So that's that. What's up?
Bro, I was sorry to butt in, bro. I was so happy when you said that to me. Hey, when I was like, oh man, I'm, a little bit burned out, and he was like, come on, that's normal for a creative, and it's so true. And I think sometimes we're expected to be, steady eddies all the time, and not everyone's like that. Not everyone's has a personality that can do that. Like for ages, right? This is quite serious, I suppose. For ages, I thought I had some kind of manic depressive or bipolar condition, because I would get that sort of, I guess, highs and lows like you're describing. And when I, spoke to a psychiatrist about it, they were like, no, like you're actually just a type 1 personality, because what you're describing, like you might be up for like a year, like ongoing, and then you might crash after that. But yeah, they were like, it's not a psychological disorder. It's just, you're just like a type 1. And it was, it's quite a relief to hear that it's not like you don't have a problem, right? It's just sort of, you know, some people work like that. So yeah, I go in fits and bursts, definitely, man. And sometimes I'll get, I feel like I get a month's worth of progress done in a day sometimes, and then other times you can't do anything, can you, for a week? So a big part of it is just relaxing into that. Yeah, bro. Anyway, it's good to be back speaking to you, man, because it's been a while since we've done one of these. So, and a lot's changed, obviously, since then. New logo. Hope everyone likes it. And obviously all the drama that's been unfolding with Asset. So, as a fan of ryQuant, as I'm sure everyone on the stream agrees, like it's just been awesome to just from that sort of entertainment perspective, see everything unfold like a drama. It's been really entertaining, bro. But it's just, I'm glad to be speaking to you again, man.
Yes, sir. A lot has changed, but it is, of course, good speaking with you as well. I hold you in the highest regards in both, friendship, but also your like you are the best MSTR like analyst from the philosophical, deep thinking perspective, as well as also having very relevant banking experience. So yeah, I'm very much happy to be on. And since it came up, I wasn't going to bring this up, but since the drama came up, let's dabble in that for a minute. Again, since it came up organically in the conversation. We are on the crusades, folks. And, a lot of times people think like soldiers, like they want to be like kind of hidden and concealed. Like on their face, they might put the war paint on, typically like a black or like an OD green. But for us, I got the neon yellow, shout out yellow, by the way. Maybe I'll do a corporate business with yellow and I'll name myself Neon Yellow because I got the neon yellow hoodie. And the point I'm trying to get at here is we want to be seen. Like how I was saying, typically soldiers, they want the element of surprise. I want the exact opposite of that. I want it to be seen. I want my message to be seen, heard, loud and clear, because the case that I have to make again about the wrongdoing of how my time was wasted, how at every opportunity that a certain person had to either do right by me or screw me over, he screwed me over, even though I did the opposite for him as just an act of good faith. So yeah, and then there's also just a lot of shenanigans going on in the public markets. There was over the course of the summer, people were taking to Twitter to kind of be goofballs, which I get the goofball thing, and that's kind of my angle here. Or I was like called myself like the goofball of True North, so to speak. But when you have people working at public companies and being like stewards of other people's like money and like the time value of their money, I don't want to see like you posting about paper Bitcoin summer all through May, June, July. Like I just really don't want to see memes. I really like I actually let me clarify that. I do want to see memes from like Lambo strategy, from like silly, from yellow, from like the silly, fun, like creative, like digital artist types. I want to see the memes, not from public company chief financial officers. I don't want to see like the slogans like it's like frat boys, right? Because there is a time and a place for that, right? It was kind of Quampros, it's kind of this, right? Like the cooler, down to earth type stuff. It's like Lambo strategies memes, right? Like there's like a silly like place for that. But when you want to like slap the name chief on your title and be a steward of other people's like money, it's another ball game, and people have to rise to the occasion. So to the extent that we can establish law and order, we're going to do that. You know what I mean? So let me pause there, because there's other bullet points we can get into. There's sub bullet points we can get into, but let me just pause there.
Right. Well, yeah, well done for having such big balls, mate, as always. So congrats on that. I wish I did. Anyway, yeah, this reminds me of like how everyone was thinking about the competition coming into the treasury space start of the year, right? And there was that theme that, hey, we're all in this together, we're all on team Bitcoin, and there's truth to that, right? Obviously, the more people that join the Bitcoin network, the better everyone that uses Bitcoin does. But that doesn't mean competition goes away, and it doesn't solve the problem from the investor's perspective, which is where to put your marginal dollar, right? So there's, even within Bitcoin, we're going to see relative winners and losers, and the price action this year is really, it's a story of that, is that we saw the community, the MSTR community that sort of built up last year, it fractured a bit, and people placed bets in various directions. Competitors sprung up, and there's real consequences to those decisions. Like, yeah, we're all on team Bitcoin, but if it really is the internet of money, then there's still a whole layer of competition on top of that. So for me, it's about like seeing past the fact that we all benefit if we use Bitcoin. It's like, well, yeah, obviously, but business is still going to exist post Bitcoin, and therefore there's still relative and winners and losers in Bitcoin business. So the whole question is, who's going to be the winner, right? And for me, obviously, I think the winner is MSTR. It's strategy, and that's pretty clear. But I think it's easy to understand on the, if you use the internet as the analogy, right? It's like everyone benefits if a new internet company springs up, because it means the internet as a whole is more developed and there's more services available on the internet. But it doesn't necessarily mean that company is your friend. Do you see what I mean? Because it's it's trying to do something is for the benefit of its investors. And so you can hold those, you can have that nuance, can't you? It's like, yeah, we're all on team Bitcoin, but there's still going to be competition within that. And it's interesting because we've got all these rival Bitcoin treasury companies spring up. So the question isn't really even about Bitcoin. It's about, okay, so how do you value these different management teams and unique market position that each company is in? Yeah, so I think that's useful framing. Obviously, we're all friends, we're all in the same industry, but it's also, it's cutthroat, and the decision matters a lot. So say you're an investor and you've piled in to XYZ company, and you've had your investment is now seriously impaired. You don't want to be told that we're all friends because we're on team Bitcoin, right? And so it's okay to understand that there's winners and losers, there's relative winners and losers, but as a whole we will benefit as Bitcoiners, or the industry benefits as a whole. And it's always a useful reminder that we don't have to take on any of this extra risk, do we? So it's like, we could always just hold Bitcoin. We don't need to be making bets on a particular company and exposing ourselves to company risk, like decisions that management makes. So if you don't like decisions that Saylor makes, or if you don't like decisions that they make at MetaPlanet, well, that's the great thing about Bitcoin, is that we've got this alternative with all of that risk stripped out that we can own. So it's always good to come back to that as a baseline. Like, no one's forcing anyone to invest in a treasury company, and we're taking on risk because we think there might be reward, and maybe that will turn out to be silly or not, and that's the fun of the game. But obviously there's a bit more to it than just we're all mates, because there's a lot of money riding on some of these decisions. So Yeah, I think that framing is useful, bro. Over to you.
Yeah, I've been thinking about this, and something very similar to what you had touched on, and then I want to pass it back to you because there's another good point in there. I didn't know if you were going to get to it or not, but there's something to be said about, and these are just my thoughts. Anything I say is not like also like a view of bit strategy, and that's the other thing we got to get to as soon as the time is right. Is talk about the bit strategy company, but these are just my views. No one else is associated with them. Like it's just my thoughts. When you have like Naka and Asset getting shredded, like .com bubble level like drawdowns in like a 2 month period of time, even less for Asset. That sell off was so intense, down to like 75 pennies. But when you have these types of, like real deal collapses, and then to just be like posting about Bitcoin, about like to your point of like, oh, we're all on the same team. It's like, again, and this is after they were posting memes, and I mean like the David Bailey stuff is just like I've really never seen someone like find a new way to like embarrass themselves with like each new tweet that comes out. But like to have these like monumental drawdowns and then like really say nothing about the company, but just kind of keep coming back to this like, oh, Bitcoin is like so great. Oh, like digital credit is like so great, and it all comes back to like the competitive landscape and how like the marketing angle. And so that's what I want to pass it back to you for like your points on the marketing angle, and then we got to get to talking about bit strategy to company when the time's right.
Yeah, sure. Yeah, so it's really interesting, isn't it, to think about this just from the strategy investor point of view. The sort of the relationship between strategy and the rival, what I think of as rival companies, because obviously there is this, I guess, synergistic relationship with the other companies where it's in their interest to acknowledge Sailor, and not doing so, I think, is dangerous for a company to do. So I feel like, and we've kind of seen that play out in the market when, 21 Capital sort of tried to point out what they saw as the issue with the long-term thesis of strategy. There's that saying, if you come at the king, don't miss, right? So I think we've seen that play out, that if these rival companies take a adversarial stance towards strategy, there's a cost. And so I think some of the smarter rivals have seen that, and they've realized, okay, we need to show deference, right? And I think Metaplanet are really good at doing that, showing in a fun way as well. Like there was that whole like, the dojo thing, and like, it was all in good humor. And again, we see deference from the Strive team, because MSTR is constantly referenced, and I think competitors sort of have to do that, right? It's the strategy ecosystem as much as the Bitcoin ecosystem. So if you're a Bitcoin treasury company, you kind of need some relationship to strategy and Sailor to be relevant. You need that Sailor repost, you need that Sailor acknowledgement. So that's interesting. And then from the MSTR investors' point of view, I'm really happy because we see the rival companies funding the MSTR marketing expense. So, we've got all this great content, really professional content that's being produced, and a lot of that is being funded by competitors. So I think it's kind of a dream scenario where imagine sort of, I can't think of another example actually where you have competitors sort of directly promoting a rival company. So that's great, because The reason I call it rivals, I know that sounds like, oh, but we're all on Team Bitcoin. Again, like I look at this from the investor's point of view, right? So my marginal dollar, does it go in MSTR or should it go into Strive? So you've got to make that decision. It's an opportunity cost, one or the other. So I look at them as rivals in that sense, like in the literal sense, you have to allocate the next dollar. So there's going to be a winner or a loser. So when you've got these rivals funding the marketing for MSTR, I mean, it's so bullish for MSTR. So, and also, I guess the other point I should add is, I'm very much bit Switzerland. So, Ryan doesn't speak for me. I've got my own views. I'm neutral on all these events. It's just interesting as an analyst to see how things have unfolded. I'm not just an investor. I also used to have a corporate career. So like, I really respect the hustle, landing these major roles at corporations. I think it's really impressive to land a C-suite position at a public company. So I don't mean any disrespect to, peers in the industry that have managed to achieve fantastic career success. But I just think it's interesting, the market structure, that we've got these rival companies funding the MSTR market expense. So if we just look at it like that, I think it's so compelling. This position we're in, where we've got this ongoing, this ongoing budget that we don't have to pay as investors, but we know MSTR is going to be talked about because you have to. It's so central to the space that's being created. Cheers, mate.
Yeah, and I love the direction you're going in. And just to add on to that, it is just such an interesting landscape, right? Because you have guys like us who are like very like long-term focused, like just bulls on the stock, and are happy to like talk about it and like on Twitter and like doing live streams like this. And you get the benefit of like exactly what you had just said, where a lot of these executives at public companies, they like their roots can be drawn back to MSTR, like their initial like research, their parabolic type move in their follower account, right? And that, trust me, no one hates follower counts and talking about that and being more cringe than me, but there is something to be said about like the rise in the follower counts that started like a couple of years back, and it all traces back to strategy. So there is something of this real dance with the one who brought you phenomena. But to your point, this has never happened. I mean, I've only thought about it for a minute now since you brought it up, and I will put more thought into this, but I can't think of another industry in the past 100 years where you had, a brand new industry formed with like one main company, and then like the fast followers, let's call them. That's kind of what this like first wave has been. I don't know if there's going to be like more waves. I have no way of knowing that, but let's say this first wave here was fast followers. In no other industry, like in the past century, would the fast followers be like on an ongoing basis paying deference like to the king and the kingdom. You know what I mean? From whether it's, they're like executives of other companies coming onto the earnings call. That's such a like interesting like game theory like idea there. I lost my train of thought with the costs.
Oh, right. Well, let me jump in, man, while you're thinking. Like, because I wanted to ask you about this the other day, because I thought this was a good analogy. You know how like strategy, the software business, they do a lot of work with Microsoft, don't they? So they've actually got, I think, some kind of serious partnership deal with Microsoft. But the fact that they do business with Microsoft didn't stop Microsoft eating the MicroStrategy lunch for all those years, right? So there's this dichotomy between the investor outcome and the industry relationships that form, and they're not the same thing. So you know, Microsoft, as far as I'm aware from some of Saylor's comments, has always been that force like poaching staff, or the best software engineers are going to go to Microsoft instead of staying at strategy. And that's why it was so hard to remain competitive in the software business. And that's why Bitcoin was such a godsend, because you didn't have to keep competing against these giants. But that's why it's so interesting that even though they're rivals in that sense, they're doing this really, close-knit business deal where they're actually partners. And I think that framing so useful, because we can all work with each other. We can be colleagues or peers in the same industry, but we can understand there's real repercussions in terms of what happens to the capital. So MicroStrategy and Microsoft were friends. They can do deals together, but the winning bet historically it was on Microsoft. Obviously that's changed now, in my view. But yeah, I thought it's interesting to think about it in that way. It doesn't have to be quite as simple as we're friends or not. It's like there's obviously going to be collaboration because we work in the same industry, but from the investor's perspective, there are very much winners and losers. And I think it's always sobering to come back to that, or remind myself as an investor, this is all great. It's great for the industry, but there will be winners and losers based on where we allocate our capital over the next 10 years. And we need to think really carefully about where we put our capital. Cheers.
Yeah, the energy at Microsoft was always like very intense, like the Bill Gates like leadership era. There's even a really funny my best friend back here, he loves The Simpsons, and there's a really funny Simpsons clip of like, Bill Gates, he's like, buy him out, boys, and they just like destroy all of Homer's stuff. But yeah, so they have a very like intense culture there with the poaching. And to your point, they can still like do business together, but everyone's looking at the scoreboard. And by scoreboard, I mean the stock price, both in that previous era, a decade, 15, 20 years ago, where Microsoft was like really becoming and then stayed like the dominant like B2B software, even B2C, business to business and business to consumer, like dominant end-to-end software system, from the operating system to like all the apps to everything else in between. But then of course that scoreboard like really, flipped quite noticeably in the past 5 years. So the business operations can still happen. And it's like, so what does that look like in the Bitcoin treasury space? A lot of it's probably like consulting, right? About like which custodial like partners to use and not use. How do you do like the wallet management? What risk factors make sense for us to put in our documentation? So it's probably like a lot of like consulting type work. But here's the thing, the scoreboard, right? All of these companies are going to be, by me, by other people, all of these companies are going to be priced in MSTR as the denominator, and the scoreboard will like speak for itself. You know what I mean? But just to wrap up the other point that I stumbled on there, like there really never has been another industry where this dynamic has played out, where you have like, a new industry that forms me around one company, and then the fast followers all pay deference to like the main company. Because you think about something like, even in like the most brutally competitive like monopolies, such as like, John Rockefeller and Standard Oil before that got, broken up. The other like, folks getting into the oil and gas business weren't like praising like John Rockefeller. Like they were trying to not get steamrolled by John Rockefeller, right? And it was more combative in the way that I think we would intuitively sense like competition would be in all of those other industries. over the past X number of years. But now we're in this like super, super interesting space where we have like the mind share, where everyone is talking about like MSTR, whether it's myself, whether it's yourself, whether it's all of the analyst community. Like people just want to do that on their own for no money. Like it's like people cannot not talk about strategy. Plus, so like that's like the analyst community, the regular contributors to Twitter, all that stuff. Plus, you now get like all the employees and like chief level executives at all of the other Bitcoin treasury companies constantly like paying like positive deference like to the kingdom because it's in their best interest to like to do so. That's where like the consulting piece comes back into play. And to your point on like the Mallards, like if you go for the king, like you better not miss. That was like information for the market, to your point about like how like other companies should respond. Because I mean, when he went on like Bloomberg, I think it was Bloomberg, yeah, in like the t-shirt and like bouncing up there like, hey everybody, we just created Bitcoin per share. We want our investors to get rich in Bitcoin terms. Some other companies they're changing their name. They've got another like small business involved. Not us. We're just a pure play Bitcoin thing. Aren't I cute? And
savage, bro.
I put the hood up specifically to like remind myself to go into this. But again, normally I do like even wearing suits just for like a live stream, but it's just not feasible right now with how busy the days have been. But like here's something that needs to be said in terms of law and order. If people in this Bitcoin treasury like space, which I kind of had a media part in like playing in the creation of with Quant Bros, remember that like forgotten history that someone changed the password to lock me out of the account that I built, that forgotten piece of history. We're gonna have a public dress code. And if it's your podcast, if it's your live stream, you can do whatever you want. You never heard me say really anything about Jack Mallers at all, or like him like wearing a t-shirt until he went on like TV. Well, it was really until he started talking bad about strategy, and then it's like, all right, let's roll the sleeves up here and let's go to work on this. But if you're at a public like speaking event, this should be like a basic training boot camp type thing where the drill sergeant's almost like condescending. He'll be like, if you don't know how to shave your face, I will show you how to shave your face and like set the standard. Like real, if you don't know how to put socks on, I will show you how to put socks on. If we are in public at a speaking event in professional media and at like a strategy world, even at a Kotzman event where all the lights are out, all the cameras, all this kind of stuff, men will be in uniform. The uniform is a suit of any choice, choose color patterns, go crazy, and a tie of a particular orange color. That'll be the uniform, not shorts, not flip-flops, not this, not that. And if people want to pull the Jack Mallers special of the t-shirt, or if people want to pull the Sam Bankman-Fried of like flip-flops sitting next to the president, I think he was in the sneakers and the white socks, sitting next to a former president, we're going to have problems. We're going to have real problems because I got like zero reputational risk whatsoever. Like I'm actively going out of my way to become unemployable, truly. So we're going to have real problems if people are not in uniform at a professional public speaking event. Again, on your podcast, on your live streams, who cares? You won't hear a word from me. But again, gotta get back to the basics of law and order. So I'm looking at my notes here. Do you wanna hop into the bit strategy as a company thing, or should we go into MSTR specific topics first?
Yeah, well, just the other thing that comes to mind, I did a little post on it the other day, but it's, you know, it's the mental model that I use to, or how I look at the price action and, you know, the emergence of all the rival Bitcoin treasury companies. Because as you know, like I used to be a Bitcoin and crypto trader. So I was always, you know, from 2017 when I got into Bitcoin, was always very clear that I'm on a Bitcoin standard, you know, measure my wealth in Bitcoin. But I traded the crypto cycles the whole time, right? So straight away, my like pattern recognition brain starts to kick in when you see some of, when you look at how the price action's been this year, and you saw these massive run-ups for these alternative Bitcoin treasury companies, and then the massive sell-offs, of course. And it's the timing of that, I guess, pump and dump for one. That's what we would call it in crypto, isn't it? We'd call that a pump and dump. The timing of that after the peak in strategy, end of last year, is very telling, because classically in Bitcoin and crypto, you would get, it would take a long time for sort of a base to form in Bitcoin. Eventually you'd get a blow off top in Bitcoin. And then after that, at some point, you would get the blow off top in altcoins. And the reason for that structure is that a lot of the altcoins, or most of them, were founded by people that have made a lot of money in Bitcoin. So this is, obviously it's a bit taboo, that, because, you know, sometimes it looks like it's Bitcoin versus crypto, but a lot of the crypto coins are founded by Bitcoiners that had made a ton of Bitcoin, and then they're looking to flip that back, right? And so that creates that sort of two-stage market structure where you get the wealth creation and the pump in Bitcoin, and then after that you got the alts. And I think it's quite similar what we've seen. Like a lot of people made a lot of money on the strategy trade last year, and then of course, like, you know, you're looking what to rotate that money into next. And, you know, we saw the MSTR, I guess, online community fracture, and a huge chunk of that community sort of went over to Metaplanet. And so we got a big obvious rotation from people that had made money in strategy, and it went into Metaplanet. The issue though is that when you get like that sort of hot money rotation, it's a lot less stable, because the base in the market hasn't been formed by long-term value investors. So like there was a lot of people getting into the strategy trade, and it's the same in Bitcoin, right? Often when people get into Bitcoin, it's to never trade it, right? And a lot of the buyers of strategy have got into strategy off the back of, say, Quant Bros, things like that. When they've had this sort of, you know, 10-year, 15-year, 20-year maybe investment thesis of strategy becoming this dominant player in the post-Bitcoin world. So they're not buying it to trade it, right? So you've got a lot of sticky investors and a lot of, I guess, sticky money or long-term money in that bid that creates that structural base. But when you get that rotation, it's all the hot money, right? It's traders that are thinking about, you know, where are they going to make their next bag, their outlook. You know, it's only a few months at a time. They're not necessarily buying in with a 10-year thesis. Obviously some people do, right? So I'm not saying that everyone, like I've got a, personally, not BitStrategy the company, but personally I have a little Metaplanet bag, right? But that's a long-term buy, right? I wasn't looking to trade that pump and dump. So I think that's a useful model. The reason that model is so unappealing to everyone is obviously a lot of right, the rival companies don't want to be thought of as like altcoins, because altcoins have this terrible reputation within the Bitcoin community. But The way I look at altcoins is from the Andreas Antonopoulos school of thought, right? So if anyone doesn't know who Andreas Antonopoulos is, please go back and watch his YouTube library. It's fantastic. So I know Saylor learned a lot about Bitcoin from that guy as well, and he was a big sort of teacher for me. And he never had, I guess, a hostile view of altcoins. He would call them shitcoins, but he explained why they exist. And it's that once Bitcoin solved that double spend problem, it meant that anyone could create their own currency, right? And so naturally, once that technology exists and it has zero marginal cost to invent your own currency, over time you will have an infinite number of new currencies created or new tokens created. And obviously 99.999% are awful, but in general, the innovation or people attempting new things isn't bad. It's like Saylor, I think, has really cleared up this a lot, and he's explained that the point of, I guess, altcoins is to enable capital raising, right? That doesn't mean people won't do it in a scammy way, but you can raise capital, as a public company in a scammy way. So it's really just a technology. It's a technology that allows easier raising of capital globally, but that doesn't say anything about whether or not you should invest in that particular project. But the mechanism for raising capital itself is not the issue. It's always about the management team behind it. And I think obviously a lot of, there's been a ton of dubious crypto projects, but in general, I think, or in principle, crypto itself isn't bad because it's just a technology. And it's always good to remember that technology itself can't be good or bad. It's always about the decisions of the humans behind it. It's just a technology that enables something. And it is really useful to be able to raise money from investors around the world, right? So let's say you're starting some project, and if you start a traditional company, it's going to be very difficult to raise capital from investors around the world. But that's kind of what crypto enabled technologically. Maybe not legally, but technologically, crypto enabled that. Anyway, so yeah, I think it's useful to have that, framing, because I'm not saying these other companies are shitcoins when I compare them to the altcoin cycle, but I'm just trying to explain some of the mechanics behind why I think that sort of market pattern emerged, where we had the big blow off top for strategy in November, and then summer, northern hemisphere summer this year, we saw the blow off top for a lot of the competitors, and I think it's because of that reason. And bro, this is, I guess, the nice segue into my company, BitStrategy. So thank you for asking. So yeah, so if anyone doesn't know, BitStrategy is now a company, and it's a private investment company that's been incorporated outside the United States. We've got a strict mandate, so we're not a Bitcoin treasury company, and instead we invest exclusively in MSTR and its preferred equity securities. So that's Strike, Strife, Stride, and Stretch. So the company is only allowed to invest in those things. And the idea is that we're going to be a permanent accumulator of both MSTR and the preferreds, almost like an external permanent buyback engine. And anyone that's followed my work knows that I've got a sort of comprehensive thesis as to why MSTR will outperform Bitcoin long term. And of course, outperform all the rival Bitcoin treasury companies. And so the reason I formed a company was to formalize that thesis and put that thesis into the company constitution directly. So it's really a corporate embodiment of my own economic theory. It's private, so I'm not seeking capital from any outside investors. It's just my own money. But the idea is for that to is to create something that can last in perpetuity. And that's what, for me, is so interesting about these products that Strategy has created, is that they're perpetual products. And I don't think the implications of that have necessarily been considered fully by the market, because normally, a business has a finite life. Whereas with these products, I can design a business that will last until after I die, and could last in perpetuity after I die. And so to me, that's really interesting. And if we can think about that in more detail, or more specifically, is that the preferred equities have this fixed coupon. So if I know I'm getting this fixed coupon each quarter, and I know I reinvest the excess into more, I can create a bid that gets bigger every quarter in perpetuity. And that's just really exciting. I think the business design geek in me finds that really appealing. So yeah, that's the idea. So as I said, it's private at the moment. We want to stay private until a NAV of at least $100 million, and then we might explore opportunities for listing. I think it's some people might have seen, I think it was at the Unconference where Saylor explained some of the restrictions on using, say, a security to your primary treasury reserve asset that apply to American companies. I know we've spoken a bit about this, so I thought it's quite interesting to address. So that's Section 40, I think, of is it the Investment Company Act? Something like that.
Investment Securities, and I think it is Investment Company Act, and the number 40 is in there somewhere.
Yeah, and so that's why Bitcoin is such a compelling choice for most operating companies, because they can buy Bitcoin without losing their operating company status. And in America in particular, it's so important to have operating company status so you can get things like index inclusion and a host of other benefits. That's not necessarily the same rule in every jurisdiction, though. And so for me, because I'm incorporated outside the United States, it creates this opportunity where that act doesn't apply to me, and so I could create a vehicle that does accumulate a security as its primary asset, and similarly has a goal to acquire as much as possible. And as far as I'm aware, I'm the first formal corporate vehicle to announce such a strategy. So that's pretty cool. And interestingly, in some jurisdictions, you can list as an investment company and still gain access to the relevant indices. So that restriction that applies to American companies doesn't necessarily apply globally, and that's why I think there's this opportunity to create a strategic treasury company rather than a Bitcoin treasury company. Thanks, mate.
Yeah, man. I just want to double underline that point. This is that we all know of the first strategic treasury company. Like I think that idea in and of itself is super groundbreaking. And we've talked about this a bunch offline for like other purposes for what I was dabbling with doing with Torque Treasury. But the Investment Act 40, I think the 40 is that no more than 40% of an operating company's assets can be in a security. So that, because I was thinking about doing a strategic treasury company as well, taking it public, and the operating business would be a hedge fund type vehicle. Or like an operational hedge fund, let's say, and that Investment Act 40% rule like kept causing this pain point of like, all right, we'll do like some percentage Bitcoin, we'll do, or like even like IBIT, we can monetize that, sell covered calls against it, but then also do like the 40% in strategy. But there's a very interesting workaround here to your point about the Australian piece. So yeah, and I just want to tip my cap to you for like being a founder, right? Like that's something that's eluded me for years now. So I know how hard it is just to get to this point right here. Like I know how hard it is, all like the diligence that has to be done to cross your T's, dot your I's, figure out personnel, figure out like the business strategy, pun intended. But yeah, man, I really tip my cap to you on being a founder here.
Thanks, mate. It's really nice of you to say. And, you know, as I said on your show last time, is that, you know, I've tried a few things in the past that failed. And I was, you know, trying to do startups before I got into Bitcoin. So it's always been a passion of mine, thinking about startups and this and that. And the nice thing about this one is how sort of organically it's formed. Yeah, I really don't feel like I've tried to force it, and it's sort of a lot of credit really goes to Saylor for creating for one sort of letting me know the correct order to do things. You know, so one of the stumbling blocks I found in previous venture is sort of underestimating how difficult marketing is, or how much marketing spend one needs to get any traction. And I'd sort of put a lot into capex up front, and then sort of misunderstood, you know, how much it was going to cost to get some traction, get anyone coming to my website and my old project. And so that was a big stumbling block. Whereas, you know, Saylor, he talked a while ago about, you know, securing that digital real estate, and that really inspired me, because I'd had that, you know, previous bad experience of getting any traction, and I thought, you know what, let's try and follow that piece of advice and do it that way around. So almost like overspending upfront on a premium domain. In hindsight, it's so powerful because so just to give people some context, I think I spent, what was it, around 6,000 USD on bitstrategy.com in 2024. I would have got that. And you know, at the time, if you think about the opportunity cost of that decision, I could have taken that $6,000 and just bought MSTR shares. Sorry, not even, was it 2024? Yeah, it would have been. No, 2023 maybe I got it. So I got it in the lows as well, right? So I could have just spent that money on that, but I thought, you know, I want to build something. I didn't know exactly what I wanted to build, but I knew instead of having the idea first, which is, you know, maybe more intuitive, I would take the Saylor approach of you buy the billboard first and then you build the business after that, right? And that was the key insight, which is, you know, if you've got a good billboard in cyberspace, you can build a business later. Or, you know, it's that I don't know if you've seen the movie Field of Dreams. It's that Kevin Costner movie. Oh well, bro, you got to watch it. And there's a famous line in that movie, because it's all about him building this crazy like baseball field in his backyard, and it's like this insane endeavor. Like, why would you do it? And he gets a sort of, you know, voice that tells him, if you build it, they will come. Right? If you build it, just have faith, you know, build the thing, and then people will come after. Anyway, so securing the premium domain just meant getting a bit of social media traction was easier, and like very quickly I managed to get first place on Google. So as someone that had struggled to get any sort of, or, you know, wasted money on Google ads and things like that, to sort of flip that process on its head and start with the premium domain, the brand, already have first place on Google before incorporating. It's just quite interesting. And then I guess the second thing that made it possible was Saylor again, because he released these groundbreaking preferred equity securities. So I always had the idea of having MSTR as a primary treasury reserve asset, because it's almost like a no-brainer rhetorical question, isn't it? Like, if MSTR is going to outperform Bitcoin, and it's good to have Bitcoin as your treasury reserve asset, why not just stack MSTR instead? It's almost like I couldn't get away from that question. If you're bullish on MSTR, like I am, why would you not just do that? So I always had that idea, but how do you structure that as a business? You know, you've got the SEC issue, so I had to work out the sort of, you know, the jurisdictional questions, and then it's, yeah, how do you have any cash flow? And the problem with cash flow is that it was always this trade-off, isn't it? It's like, oh God, why would I buy that instead of Bitcoin? Like, any sort of cash flow generating business or endeavor, it's like, oh, why don't I just buy Bitcoin instead? But then when Saylor released Strike, structured Bitcoin, so suddenly I could still increase my exposure to Bitcoin and get cash flow at the same time. It straight away I was like, okay, well that's a business, because I can incorporate, I can have a little marketing expense like my lovely gold check mark, and I know I'm going to be able to pay for that permanently. Whereas, you know, normally if you're trying to right, as we know, if you're trying to start a business, it's stressful because you've got this overhead, this burn rate. You'll hear startups talk about what's the burn rate, and most startups are just hemorrhaging cash, right? And they're often doing that just with, you know, funds they've raised because they're trying to develop a product or get some traction, and meanwhile they're just wasting cash. Whereas with the unique structure of Strike, I could set my business up and know that my OPEX is covered in perpetuity straight away while still being exposed to Bitcoin growth. And there, like how many startups are there that are cash flow positive from day one and basically know they will be over the next 10 years or even in perpetuity? It's like, that's unheard of, right? It doesn't exist. So I've started to actually get really, really excited about this, man. And like the more I formalized it, the more excited I'm getting, just because I think Strike is so compelling relative to Bitcoin as a thing I'm stacking. So, you know, we've seen one of the big criticisms of MSTR, even in the, you know, credit rating report, is no operating income. Now, obviously, my dividend income isn't operating income, but it's investment income and it's reliable cash flow. So if you compare this structure to a normal Bitcoin treasury company structure, immediately it's more compelling. I have reliable cash flow. The cash flow will grow quarter upon quarter. So you don't have this question of how we're going to raise the next dollar. How's this going to work in a bear market? If Strike is your primary treasury reserve asset in a bear market, you still get that fixed coupon, right? So even if Strike trades down, I know I've got that fixed coupon coming in. So it just means any buys that I make have got a higher effective yield. Whereas conversely, for Bitcoin treasury companies, obviously accumulation rate has to slow in a bear market, because there's that reflexive relationship between accumulation rate and Bitcoin price, you know, which is not necessarily a bad thing. It's also the reason why accumulation rate accelerates when Bitcoin price goes up. But it's just an interesting distinction between a Bitcoin treasury company business model and a strategic treasury company business model, because we have that consistent investment income sort of built in from scratch. Anyway, cheers, mate.
A lot of good talking points here. I think that in addition to your point of like how many startups can like say that they're not only cash flow positive like day one, but like they will be able to be cash flow positive in perpetuity. The thing that I think to add to that sentence or to that idea narrative in your head is that like there's also that, and there's no reliance on customers. Like that's really like the big idea here. It's like the idea I had with Torque Treasury. It's kind of the idea I have with strategy, of course, notwithstanding the software business, only talking about the Bitcoin treasury side of things, but also very much applicable to Bit strategy, where like that idea of not needing customers is so radically profound, because basically every other business except MSTR, the idea company that I was involved in, and Bit strategy, nearly every other company conceivable now or in times of past have had a reliance on customers, right? Even if there's like a government subsidy involved with like the water and like utilities, or there's like regulation involved, it's still like customers on the back end, like consuming the water or the utilities. So the cash flow, like not being a concern, not needing customers, use it like benefiting from like the perpetuity aspect of the prefs. I mean, it's so like all those ideas in a vacuum, excellent. Another idea as like a standalone here is that bid strategy in a way is kind of like long the GDP of the earth, in the sense that, and this is something that just came to mind, so I'll have to like keep refining this, but with like your core foundational asset is still like Bitcoin in a sense, right? And you're choosing to own like a derivative in the form of a company's like equity to express that like bullish like view on Bitcoin, and the company can like outperform the actual the asset itself. But the asset itself, Bitcoin, to me, this is really one of those things that like I think it is going to stay correlated to the Nasdaq and the S&P 500. I mean, like years ago, right? That was like one of the big narratives and talking points. It's like, oh, it's this like non-correlated asset, and at times it was, but you have to go farther and farther back to find those times, because when the market cap was much smaller, right, measured in the tens of millions, hundreds of millions, single digit billions, it can actually be moved around by, just like the crypto anarchists, the libertarians, the internet, even like RuneScape. Some of the RuneScape people are trillionaires now. And I used to play RuneScape, and they, in like '09, 2010, like they had just like beautifully transitioned into like, oh, we get like digital internet money. We were just playing with digital internet money on this game, and they're trillionaires now. But back in like those days, or like the further to the left that you go on the calendar, like, yeah, it was not correlated. Now, when it's the market cap of silver, it kind of is, right? And silver is almost a bad example there, because both silver and gold are uncorrelated to the Nasdaq S&P 500, but I'm just silver in terms of market cap size. It's like it's a macro asset now. The point I'm trying to get at is that if like we did go into like a global like recession bordering on a depression, that many smart people in air quotes for those just listening and not watching, many smart people said that we were going into like something like a depression coming out of 2022, with interest rates going from 0 to 550 basis points. That, and quantitative tightening, and the Fed being hawkish, and companies slowing down on hiring. Like if you've ever seen that one beautiful chart of like the number of software engineers like hired at companies, it's a beautiful symmetrical like up and down. There was that. There was layoffs at big tech. There was earnings were rolling over. Corporate profits were rolling over. So, I mean, there was a real, and you need a lag effect to really measure the like corporate profits rolling over. So I guess like in hindsight, there was like, a real case to be made for that. And if something like that would have happened, Bitcoin would have like continued to sell off, right? If something like that is to happen now, like Bitcoin's going to continue to sell off. But if that doesn't happen, right, like if the global economy can hang in there, which is like, no small task with all the wars, all the political instability, all the geopolitical turmoil, and I could go on and on with that. But to the extent that like growth can keep flourishing, AI can keep like, driving buzzline narratives, or actually start to have like fundamental, undeniable like change in the economy, then like I expect Bitcoin to like keep grinding higher, right? But it's this, you need all of the people working at jobs, all of the like, genuine like GDP growth. So I think that's kind of like an interesting like standalone idea, that it's like a business without like a reliance on customers, without like the typical cash flow issues, especially associated with startups, right? Like all companies have like the cash flow dilemmas, like how much should we like spend on marketing? Because the more you spend on marketing, you're just compressing your own margins. So you get to avoid all of that, and then you're really like taking a pro humanity bet then in that like secondary idea of like you just positioned like long GDP. If GDP keeps going higher, like there's no and the fiat like nightmare in America keeps kind of like hanging in there but grinding on. Um, it's just like your long GDP. So it's a cool like humanitarian like we're all in this together, bit strategy. Kind of like a secondary, more abstract idea.
No, like I love that, man, and that actually, you've articulated it quite well. I probably wouldn't have remembered to say that if you hadn't given it that framing, but you've just sort of reminded me a lot of why I even started, right? Because I think it's easy as analysts or investors to always try and go into that observer mode and say, oh, I think Bitcoin's going to do this or that, without considering the impact that they themselves will have on the outcome. You see, so it's almost like we get used to analyzing as if we don't exist, as if we're not players in the game that will change the outcome one way or the other. And the mental experiment that I like to use is that post I did the other day. I think you saw it, where I go, imagine what the Bitcoin price would be if Saylor never started buying it. Right. So if you never, switched MicroStrategy onto the Bitcoin standard and, started this whole industry, where would the price be now? Would it be 60K, 50K, probably something like that? Right. So imagine if Saylor had looked at Bitcoin and just gone, oh, is Bitcoin going up or not? Well, the question's kind of ludicrous, because it's like the answer is it will go up if you start buying it, Saylor. Right. So if God could speak to Saylor, right, if Saylor went to God, hey, God, like, is Bitcoin going to be the right decision? Like, is it going to go up by 30% CAGR every year if I buy it? And God would say to Saylor, bro, you're asking the wrong question. Instead, think about like what you should do. Right. So like, what's your role in this? Bitcoin will succeed if you get behind it. Now, that whole framing's like unpopular, because people rightly will tell you that, well, Bitcoin success was guaranteed and it's kind of indestructible. It's like, yeah, that's true. Like, from the network's point of view, it would be okay and it would tick along. But it's like, I think this is kind of what Saylor was getting at a bit when he said, look, let's stop with that fix the money, fix the world, and let's actually start doing something. Like, because because there's a sort of there's like that passivity, isn't there, to, oh, well, Bitcoin's just going to win regardless. And like, think how silly that must sound to Saylor, given how much he's done to make it succeed. Right. Like, so he's the guy that's lobbied FASB to update the accounting treatment so we can recognize. Now, someone either does that piece of work or they don't do that piece of work. So there's Bitcoin. Bitcoin has a value if that work's been done, and it has a value if that work hasn't been done, right? And it's not one and the same, right? So anyway, where am I going with that? Well, that's kind of the point of bit strategy. It's, even though obviously I'm a humble retail investor, I'm not a massive institution. Bit strategy was founded with an idea that I matter, right? That my input matters. Because I think it's kind of a boring way to look at the world if you don't think that your role matters. And so I, straight away, I was so grateful to what Saylor had done with his advocacy for Bitcoin and his consistent bid. I was like, well, what if I can just create a consistent bid for MSTR? Why don't I be that persistent bid? And of course, I can't advocate for a security, and I never would advocate that anyone buy MSTR because it's a security. But just by building on the company myself, I can sort of try and replicate that same approach. And so I don't look at it like, is Bitcoin going to succeed? I look at it like, no, we're going to make it succeed. And I look at strategy the same way. I don't ask myself like, will strategy win, as though I'm I don't exist or I can't have an impact. I look at strategy like, no, we will win because we'll make that happen. And yeah, that's the point of bit strategy, to make strategy win. Like that's the point. And it is long humanity, it's long capitalism. Like I know a lot of Bitcoiners, they find it weird as well. It's like, well, why are you doing that? Why wouldn't you just buy Bitcoin? It's like, well, I already have Bitcoin. Do you know what I mean? I've already got Bitcoin. So then I go, where should my marginal dollar go? Well, I think my marginal dollar should go to supporting strategy, because I think that's the best use of my marginal dollar. It's like, that's the quickest way to advance the Bitcoin network, in my mind, at least. I view strategy as the layer 2 of Bitcoin. So I think strategy and strategy securities is how we get Bitcoin exposure to the majority of the world. And so the idea of bit strategy is to create a vehicle that furthers that mission as quickly as possible, right? And all I'm trying to do is replicate the lessons that Saylor has articulated for Bitcoin, and also business strategy. So it basically is looking at what Saylor's done and taking the Bitcoin out of it. You go, if you take the Bitcoin out of what Saylor's done, what is he doing? Well, adopting something as your primary treasury reserve asset, buying it and never selling it, and tweeting about it. That's the core of it, right? So I was like, well, I can basically do that for strategy. And then the exciting thing is, with the invention of these preferreds, now it becomes really easy to do, right? It becomes really easy. Like, even with what I've set up now, bro, like, I pretty much don't have to do anything. And I know for every quarter for the rest of time, like, notwithstanding a failure of the company, right? So, you know, putting aside company risk and also assuming that we don't have more than an 80% drawdown, which is, you know, where Saylor's said that we might start, well, strategy would have to start withholding dividend payments. So assuming we don't get that 80% drawdown scenario, I can do a bigger buy of preferreds for every quarter forever. And I can do a tweet about it, right? And at some point that will snowball and it will compound, right? In the same way that Saylor showed with Bitcoin. So the reason Saylor won Bitcoin social media is because he bought it, right? Saylor doesn't go on X and try and give the best takes. He bought it, right? And if you buy enough of it and you keep saying that's what you're doing, your authority in the space will compound, of course. And that's what happened to Saylor and strategy. So the idea is basically, replicate that. Of course, strategy themselves can't do that because they can't buy their own products, and therefore it's sort of, in my mind, it gives it right. And that's the point of my brand, isn't it? I'm the bit extra to strategy. It's the bit that they can't do, right? It's the bit that strategy can't do themselves, right? And that's me. And because strategy can't buy their own products, so who's going to buy them? I'll buy them. Obviously, lots of other people buy them too. But that's the idea. I think you put it beautifully, man. It reminded me of that Saylor quote when he was like, strategy is like long capitalism, right? Because a strategy is a bet that the credit-based society that has given rise to Western flourishing will continue, right? And bit strategy is trying to put my weight behind that and align that with Saylor, because I think that's the best thing. I think we should continue in the Western tradition that we've already got. I don't think we should abandon our credit-based society. I think there's good evidence to suggest it works well, but we should bring in sound money as the backing. And so I very much believe in Saylor's vision of the future. And I'm just trying to get behind it as much as possible, but also to sort of enjoy myself at the same time and remain independent. So that I think that's really important to note, bro. I know I'm digressing a bit here, but really important to note for everyone. Please don't get the wrong idea. I have no affiliation with strategy whatsoever. So I don't talk to strategy. I'm entirely independent. I'm just fully in support of them. right? And I love that, right? I love being an independent actor, and I love the fact that BitStrategy is permissionless, right? So I don't, just like Bitcoin. Look, think about Saylor, right? Saylor didn't have to ask Satoshi's permission to start stacking it. He just started stacking it, right? And I'm trying to do the same. And that's what I like about MSTR. It's a public company. I can just start stacking it. I can listen to all the interviews. I can watch all the Saylor content, and I can just buy the thing. It's permissionless. I don't need to DM the company to ask them if I can do that. I can just buy it. Yeah, and so to me, that really appeals to me. I think that's one of the reasons I got into Bitcoin in the first place, is because I didn't have to ask anyone's permission for once in my life. I could just buy this thing, and then suddenly, oh, that makes me more independent, and now I have more bargaining power because I own this asset. So that's really cool. Like, that was, that's why I wanted to leave my job in the first place, to be able to, make my own decisions and so forth. So yeah, I just feel really, really blessed, bro, to be in this opportunity now. I have to keep sort of pinching myself, because I'm like, oh my goodness, I feel like I really sort of struck gold here, and I just need to sort of chill out and keep buying the preferreds for the next 50 years until I die. And that's pretty exciting. Cheers, man. Over to you.
It's the bit that strategy cannot do themselves. Can you say that one more time? I love that phrase.
Right, the slogans just write themselves, don't they? If you've got a premium enough name, the slogans, the logo created itself, mate. And I'd like, yeah, bit strategy is the bit that strategy can't do themselves. There you go, mate. There you go. But yes, it's like, that's the nice thing, just to go back to, again, bring it back to Saylor. Like, when he bought alarm.com, or even when he bought strategy.com, he knew one day there would be the business that fit that domain, right? One day there would, but he had the domain. He sat on that domain, strategy.com, for what, 2 decades. And it was only, right? It's crazy. Like, the level of how long-term, like, we got, the market reacting to price action day to day. Meanwhile, you've got Saylor sitting on a domain asset for 2 decades before the time's right to unearth it and rebrand his company. So yeah, it's nice, because it's sort of just following Saylor's tips, right? You've got the billboard, the business sort of created itself now. And so, yeah, it's nice. And the other nice thing, bro, is just the lack of pressure. You know what I mean? And because what's that saying in life? Like, you should want to work with everyone, but, wait, what is it? I can't remember the exact phrase. It's like, you want to work with other people, you don't need them, right? And that's how you should be with all of your relationships. And that's what I feel, Saylor's really helped me get to that point, because of this business structure that I feel like I've stumbled upon, because I really don't need anything from anyone. To your point, I don't need any customers. I don't have any employees. I don't need to ask permission from anyone. And so, right. And it's not to say like, oh, I don't want to work with anyone. Like, I really like collaborating with people in the space, and I'm really open to exploring opportunities, but it's just so nice to be in that bargaining position where I have a business that I don't have to sell anything. Right. And, I feel like that's such a unique position to be in, to not need anything from any customers, but then 2, to have that infinite time horizon and outlook with an infinite increment increasing forever, is just like such an unusual position to be in. So yeah, I think what I'm doing now is just trying to make sure the foundation is solid. Hey, so just taking my time, because like I say, there is no rush. I think it's really telling what Saylor keeps emphasizing. He's like, look, we're in year 1, guys. We're in year 1. And to your point, mate, about those people that got in early with the right thing, it's kind of what I'm trying to do here, right? If I just keep this thing ticking over, I don't really care what happens the next couple of years. I'm thinking, how big's my bid every quarter going to be in 10 years time? Or 15 years time? What's my NAV going to be if I've never sold any of these securities, right? And so that's really exciting. I'm really looking out that sort of 5, 10, 15 year, 20 year time horizon. And I think that's important for everyone to do, because just like the early days of the internet, if you just like calm yourself down and look around you for the opportunities, we're in at the ground floor here. So if we just take this long-term approach and we're consistent, like a lot of people in the industry have been doing, like there's so much good work going out there, but yeah, we are all going to win. Anyway, mate, bit of a waffle. Over to you.
No, I love the waffling, and I always take my notes on the side to touch on the really engaging points. But one of the things I see here with BitStrategy, the company, is that there's a real shareholder activism piece here in like the positive sense, not the activism where they go and buy 10% of the stock. Like, who's the guy who just did that with Disney? Or like maybe it was 2 years ago. I bought 10% of Disney and then wanted to basically do a hostile takeover, get a board seat, all this stuff. But the positive shareholder activism, and this goes back to like Warren Buffett. This goes back to even like Bill Ackman today, where they take such large percentage, like they buy such large percentages of the companies and then basically like assist the companies, right? In any way that like Pershing Square or I forgot Berkshire Hathaway, in any way that those analysts on either of those like companies, Berkshire or Pershing, if any of those analysts or any of the employees have like good relationships with like a potential supplier, or they just have a domain skill set in-house, they just like help the companies, right? Because it's like they're such big owners, right? And this is where we get into, they're not just stocks and ticker symbols, they're like certificates of ownership in the companies. So you establishing this, how can I phrase this? You establishing this entity in another jurisdiction, focusing 100% on the strategy ecosystem of products, is really like a slightly different application of positive shareholder activism. So I think that's super cool. Couple quick more points here. The whole like Saylor influencing the price of Bitcoin piece that you touched on, that's a Soros concept, right? Where he talks about this in The Alchemy of Finance, and I almost know that's where you pulled this idea from. But Soros will say, like, the most rational person in markets is actually the observer, like the non-participant, the person who doesn't have any like risk positions, doesn't have any positions at all. Like, they're not an investor, they're just like a diligent observer. Because then you won't have like the emotions of the swings, you won't develop your own biases, you won't like do these other things, but you also won't influence the outcome. So there's such a fascinating reflexivity, alchemy of finance type component here to like Saylor, like applying the buying pressure like through the strategy vehicle on a finite asset. So that's where like the alchemy of finance stuff starts to come back in. And I feel like we could theoretically, because and you and I have talked about this a bunch offline, it's like the idea of like making a strategic treasury company is kind of like a quasi like the buyback like arm of strategy, right? If you're setting up like a permanent holding entity, whether operating company or investment company or who cares, right? Just a permanent entity in a corporate shell, or a corporate wrapper, I should say. That's kind of like a quasi, just like a third party, but like doing the buybacks for you. So here's an idea, right? Because I was more bullish on the idea of like doing buybacks like 10 years from now, right? And I put that idea out there, put it into the gauntlet of like feedback. The only person who made me like really stop, pause, change my views on this was yourself. Right. And with the narrow idea of, or the specific insight of, with traditional buybacks, they retire the shares, right? So like Google, Apple, Facebook has done tens of billions of buybacks recently, that like in the past year or so. those shares are basically like burned. They're, destroyed. They're obliterated. So it's in a sense, and you were the one who told me this, in a sense, it shrinks the company, right? It's shrinking the amount of shares outstanding. So from that point on, I was like, all right, there has to be like perhaps a way of doing like buybacks that does not, shrink the shares outstanding. My idea is, and I'm not at all saying like do this with bit strategy. I think it makes much more sense for you to keep taking the Joe Rogan path, right? Like controlling your own destiny. But perhaps other other like entities could be stood up that like just hold MSTR, or they hold, and it can be like a pure play investment company, even in America, where they just hold MSTR, or maybe they have like some preps in there too. Then at a certain point in the future, right, 10, 15, 20 years from now, when, let's say Bitcoin is or at least less liquid and available on exchanges, perhaps much less liquid and available on exchanges, it's like, well, what's the next thing to buy? If buying the stock back directly poses this shares, outstanding shrinking phenomena that you and I both don't want, perhaps strategy can just buy those companies, right? And like just buy them out at 1x NAV as a way of, and then just keeping it as a wholly owned subsidiary, right? In the way that macro strategy is a wholly owned subsidiary to strategy today. That way the shares don't get burned, but they're essentially, pulled out of the float. So yeah, I think bit strategy itself, the company, like really opens up so many doors as to like, okay, what is possible? How can I maybe get involved in this or something like that? Does this open up new doors for strategy? So have you thought about that at all? Like the idea of like other similar bit strategy type entities, maybe they're just MSTR, maybe they have some of the press. But then that entity being purchased at 1x NAV from strategy. Have you thought about that as like a buyback solution?
Yeah, like, you three different awesome things to talk about, man. So yeah, I'll start with the one you just mentioned there, but I'd like to get back to the other 2 points you made because they were great as well. But yeah, this idea of the buyback engine I thought was so compelling. I credit you with seeding that sort of idea in my mind because as we know, strategy doesn't do buybacks if we're trading above 1 MNAV. Sailor's mentioned that below 1 MNAV, that's not off the table, which is of course prudent. But one of the interesting things about our business model is strategy's business model is that we're trying to issue more equity to actively grow our market cap. Because every time we issue more shares, our market cap grows. And that then in turn means more passive inflows, which means that we can buy more Bitcoin and capture a bigger share of Bitcoin. So it flips the normal logic on its head, but then it creates this opportunity for an external buyback engine, as we say, where, okay, strategy aren't going to buy back their shares. So I can be this perpetual bid over here. I can't comment on, strategy eventually like buying, like that's certainly not my intent. So I'm not looking for like an exit to strategy whatsoever. Like the intent for, so the intent for my vehicle is just to exist in perpetuity, and I want to set it up even after I die to potentially help fund financial education. So that's the long-term goal. So I don't need to sell out. But it was really interesting what you. Oh God, what was the? Oh yes. Okay. So about other entities potentially adopting a strategic treasury company approach. Now, this is one of the things I love about my business model because it's one of the beauties of the Bitcoin treasury company business model was that Saylor could invite other companies to join him, couldn't he? So because of right, so normally, as we know, you keep things a trade secret, or you're like, oh, I better not tell everyone about my business idea. So it's like, why am I going on on Ryan's show right now talking about all my business plans of what I'm going to do? Well, it's because it's copy proof. No one can copy me. It's like, if you copy me, I welcome that. So if someone created an entity and they started accumulating MSTR, I would consider them an MSTR investor, and I consider all MSTR investors as my allies, right? So, similarly, it's very similar to that sort of we're all friends in Bitcoin, very similar. So, I welcome anyone else, obviously accumulating MSTR. Like that's great from my point of view. The vision for my company is to one day be a very significant holder of both MSTR and the prefs. And like I mentioned at the start of this call, competition is a good thing. So we can all be in this together, but we can still want to win because there'll be relative winners and losers. So, of course, I'd welcome everyone else to accumulate the securities, but of course, our goal is to do that better than everyone else, right? Because that's the nature of competition. So yeah, that was interesting, man. But then looping back to those other two awesome points you made. So firstly, on shareholder activism, I was so glad you touched on that, because that was central to the idea of what I was trying to do when I started, which was be an activist shareholder. But normally, as you pointed out, or often, being an activist shareholder has a different connotation to what I'm trying to do. So guys like Bill Ackman, they're kind of like these superstars that are bigger than the business that they're buying into, right? And sometimes, right? Or Berkshire's a good example. Or maybe they're telling management they need to change something, right? Sometimes, or that's the idea. Whereas from the start, I was trying to approach it like, what if there was just an entity that was supportive, always supportive and always buying, right? And that was the concept, right? So be an entity that's always supportive and always buying. And it's really played out quite interestingly. Like a good example being like, when there was that lawsuit, one of these, dubious lawsuits that got put on Strategy. I think it was about the shareholder communication one, right? And I did an open letter responding to that. And that was a good example of an opportunity to be a shareholder activist where I'm not doing anything special, really. I'm just voicing my support for the company. And I sort of realized if you do that ongoing, of course, that can't be priced in because no one knows you're going to do it. Right. So it almost like creates your own alpha, because, I was like, it's easy to, and, I know critics would look at that and they go, oh, but of course, what makes you think you could have any impact on anything? But that's just not the way I look at the world, right? It's like, at what level of personal success do you need before you start thinking you're a player in the game, right? Like, do you need to be a millionaire? Like, what is it that you need before you start thinking you can have an impact, right? So even when I was starting this account, I viewed it like my contribution to the company, just being a positive voice of support, would create over the long term massive shareholder value. And I still believe that, right? So, and again, that's modeled after Saylor. So because it's very simply, if you look at where the Bitcoin price would be if Saylor made the decision, you know what, I'm already a billionaire, I don't need to do this Bitcoin thing, I'm not gonna bother, then Bitcoin wouldn't be what it is today, right? We'd be in a completely different position in the market. So I looked at that and I go, well, obviously I'm not a billionaire, but I am, I'm a like semi-retired professional investor and Bitcoiner. So if I can't have an impact on this stock, who can, right? And I thought, if I just support Saylor and Strategy over the long term, then that won't be priced in. So I create my own alpha, and then that's basically the idea, which probably sounds very cringe to a lot of analysts, that that take a more objective view of the market. But you touched on where the inspiration comes from, which is very much Soros and Soros reflexivity. So you're absolutely right when you said that book was such a game changer for me, man. And just really understanding reflexivity is core to understanding strategy's business model. And if you don't know that if you haven't read that book, you don't understand reflexivity, really. And it full stop. And so you've got to read that book, The Alchemy of Finance. If anyone's listening and you haven't read that book, you've got to read it. And because it completely changes how you look at things. And that's the idea for bit strategy. It's another reflexive engine on top of strategy, which is already incredibly reflexive. Like that was, a core part of QuantBro's thesis, right? The reflexive flywheel, this relationship between the rising Bitcoin price and the corporate success. And those two things are going to feed each other. So strategy's corporate success feeds the Bitcoin price, Bitcoin's price rise feeds the corporate success, and it creates a flywheel, right? And there's, a million ways that actually applies, which we don't need to get into the weeds of. But bit strategy is an extra reflexive engine built on top of that, right? So because I realized from the start, if I securebitstrategy.com, then if strategy becomes a really popular company, then that domain will go up in value. And if my domain goes up in value, then I can promote strategy or talk about strategy or invest in strategy from that more advanced position. So and then with this final layer, with the invention of the preferreds, in my mind, it completes that reflexive loop. Because as I say, the missing part of the strategy reflexive engine is the buyer of the products. And that's kind of what the dotting of the I also represents in my logo. It's a bit like, okay, and that's the finishing to the reflexive engine. Which maybe sounds a bit nuts to some people, but it's like there's an elegance to strategy's business design, which I don't feel is widely appreciated. I know you get it. It's a beautiful business design. Like you can see this in the pinned post on the Strategy X page, which I can't quote it off the top of my head, but to paraphrase, it's when you take away everything that you don't need and what you're left with is perfection, right? And that's kind of what strategy does. And again, that's a design principle I try to apply to bit strategy. So if you strip away everything that you don't need of a company, you just need income and growth, right? You need income, and you want your income to grow. Every company wants their income to grow every quarter. Boom, check, I've achieved that. Everyone wants growth indefinitely. Boom, check that. So with Strike and this plan to buy each quarter, I achieve both of those things. So there's an elegance to that business design that feels right. And when I look at strategy as a business, again, it has that same sort of feeling. It's like there's a feeling when the business design is correct because it's been stripped away to its fundamental parts. I think that's why strategy is difficult to understand for a lot of people, because they go, you can't do that. You can't just raise money and buy Bitcoin indefinitely. It's like, well, you can. It's just the first time this has ever happened, and Saylor sees that opportunity. Thanks, mate. So great questions, bro. Really appreciate the questions.
Yeah, I had a few follow-up points on that. I mean, you really do know how to pack a lot of good stuff into each waffle session, let's call it. You know what I mean?
You bring it out of me, mate.
We bring it out of each other. You know what I mean? Should we go into some of the common kind of or the things that we were talking about, the MSTR specific talking points? I think the capital structures that point, that's something we got to get into. But yeah, just to give you one last thing here before we go to that, and then I do want to take some questions too. By the way, if you got to run bit strategy at any point, let me know. I might stay on, do the questions, but you're of course welcome to stay the whole time. I just don't want to hold you too long. Although I do want to run longer than the Brady Bunch, the other show. You know, after people wake up from the naps, there's just a lot of places to hide when there's like 5-6 people up on the screen. There's a lot of places to hide, and that's a totally different ball game than doing 2 hours by yourself or like multiple hours like one-on-one. So thank you for doing this. But yeah, there's this notion that has to be addressed that seemingly has not been addressed like fully yet. That strategy is a business, right? To your point there about like the design of strategy as a business, because that's what it is. It's not, a closed-end fund. It's not an ETF. It's not, leveraged Bitcoin price exposure, right? This is a business with optionality that can try out different things, right? See what works, what doesn't work. There was a point in time in which like the traditional convertible bonds like made a ton of sense, right? And the talking point, the narrative around that was like, we're able to borrow money at like 0%. This is great. As the months and a couple years, really like I think the first convertible bond, and don't quote me on this, was either April or May of 2021. So we do that for, a couple years. And then through that time, through that information gathering process, it's like, okay, the amount of convertible bond only shops out there, not huge. The amount of convertible bond shops out there who will buy like, essentially Bitcoin backed like convertible bonds, smaller. So you have like the smaller market effect. But at the time, right, as strategy was like figuring things out, and with how good the interest rates were, it was a good idea. It was a good use of like everyone's time, energy, efforts, and the performance is what it is, right? But then, and of course the chat GPTs of the world helped with this. Saylor talks about how he just went back and forth with like, this is what I want, how can I do it? All right, refine it a little bit. This is what I want, how can I do it? Refine it a little bit and keep going back and forth. But it made sense to launch into like a different fixed income product, again, because strategy is a business. And it's not an ETF with like a closed charter and it doesn't do anything. It's like, no, it can experiment and do different things. The benefits of switching to the prefs is that you're now creating a perpetual instrument, right? It's not the one-off convertible bond sales. Because the other thing with the convertible bond sales is that there might only be a couple times throughout the year where the implied volatility metrics, the gamma, all the other like technical stuff makes sense from the perspective of the convertible bond shop who's buying the bond, right? There might only be a couple, 2-3 times a year where it makes sense, maybe 0 times a year where it makes sense for the convertible bond shops to buy this Bitcoin-backed, this very novel, unique Bitcoin-backed bond. So with the perpetual nature, it's like anyone can access them at any time. By the way, when I say anyone can access them, I mean anyone can access them, right? Like the convertible bonds, that's either going to be like a high net worth, like a very high net worth individual, such as like, I believe Bill Miller III, Bill Miller IV there, but that's also a family office. So that's something of that gray space between high net worth individual and like, are they like an institution? But it's either like a situation like that or like an actual financial firm, right? So it's a super limited number of like people who can access these things. You would obviously need accredited investor status to participate in the convertibles. But with the perpetual preferreds, it's like they get straight. There is like an IPO round for like a day. I've never felt the need to participate in any of these things in the IPO of the prefs because like the next day it's trading publicly. So now we've avoided the cyclical like timing issues or lack thereof opportunities to sell the converts to a limited number of people and institutions to now everyone with a brokerage account access can buy these things. also just the forever time view just simplifies a lot of the potential uncertainty that can come in the convert only situation, because again, it's only a handful of times or maybe 0 times a year where you'd have an actual rational actor on the convertible bond side to buy these things. And it simplifies the business, right? Because it makes like the analytics and the data so much smoother. It removes any opaqueness. It gets people like of the mindset of like what the role of like the Class A equity ATM's like main purpose is on a go forward basis, right? It's like to pay the dividend expense for the prefs. So yeah, I think that shift in and of itself is like huge and monumental. But what it shows is that like strategy is a business, right? It's not it's not an ETF, it's not leveraged Bitcoin price exposure. Like it's a team of people working around the clock constantly in a pretty intense environment for ways to, not only grow the Bitcoin treasury business, but even Long Fong in the interview with Adrian Morris, which I thought was a great interview. He said, we understand that there's like less pressure on the software business, but like we're not giving up on it. And perhaps this absence of pressure on the software business can allow it to flourish. So there's innovation in the financial engineering side of the operation. And there is an ability for a turnaround story in the software business. And these people are working around the clock in that effort, right? So now this leads us to the point of this is where we should, as like an analyst community, be getting away from, especially the MSTR bulls, getting away from just only thinking like MNAV. And I'm so tired of seeing like the MNAV posts on Twitter about strategy, about like the other treasury companies, because it's like that old quote. I think Munger would say this. I don't know if this is one of the ones that he coined, but I think he would say that, or someone else was saying this, that everyone knows the price of everything, but the value of nothing, right? It's like, and that's what I feel like this constant like MNAV like references. We know the price we know the price of everything, but the value of nothing, right? And it's like, I understand there isn't like a clean like price to earnings like formula that everyone could like intuit and understand and get on board with for a Bitcoin treasury company. So I understand that there's like a bridge to gap there in terms of, this idea making more sense to more and more folks. But like, that's what it is, right? Like strategy is a business. It has a very, very elegant, frictionless business design to it that doesn't have like a reliance on customers for the Bitcoin treasury side of the operation. And one point here on the absence of friction, because I posted about this and I was like, much more on that later. So just a quick primer on that. When I say like MSTR is a frictionless business, I mean there's so many other things that they don't have to do that every other company has to do, right? Like to beat up on Tesla, my favorite company to beat up on. When you think about how like complex and intertwined and like just messy that business is from start to finish, it's such a nightmare, and it raises the question like, why would anyone invest in this, especially given like the elegant design of strategy, right? Like Tesla has to source raw materials on as long of contracts as they possibly can with companies that are in other countries to get nickel, lithium, cobalt, of course other raw materials, but think like to build the batteries. Then they have to move these raw materials all around the earth, right? While they're doing that, they also have to have a team of engineers figuring out, how do we build the factories, right? Like the factories are the name of the game. How do we get like advanced manufacturing, like excellence into this factory? And then they have to bring all the materials in, and they have to go down the whole channel of the factory, where it's this large mechanical arms that are moving the chassis of the car down to get the paint and all the doors put on and all that crap. While they're also doing that, they're trying to put solar panels on people's houses, and that business is failing. Like it is deader than Bin Laden, the Tesla solar business. Nobody talks about that. They're also building Megapack batteries. They're doing that. They're doing, auto bidder software, which is like an energy specific like trading system for sending the electricity to and from the grid, from the batteries to the grid. They're doing all this they're building the Optimus bot, which I think is going to be the biggest flop in modern tech history, of something that just does not get the job done from a consumer adoption piece. I think it's going to go the pathway of like the Apple Vision Pro, where it just gets sunsetted. But this one's going to be so much harder to sunset because so much hype was built into this. So Tesla's doing all this, like all this very, very complex craziness, globalized like systems of supply chains and stuff like that. And also, by the way, they have to convince people to buy the cars, to buy the robots, to put the solar panels on the house. So there has to be like this constant like marketing effort. There's all this stuff, right? Like, and I can go on and on and on. I could use other companies as examples too. But strategy actually does have this like elegant, like frictionless business, right? I get that other people are hung up on like not understanding like cash flow as it pertains to like this use case of a Bitcoin treasury company. I get that some people don't want to use Bitcoin dollar gain as the earnings, as the E in the price to earnings ratio. I get all that. But I refuse to think of this, or even just keep reading the tweets of people associating strategy as just an ETF, a levered Bitcoin ETF that is like trading at an MNAV. And if it's ever above 1, then it's a premium. And it's like, no, that's the wrong way of viewing this. So that was talk about a waffle here. I was about to pass it to you for the capital structure and the strike point, but any comments you got there, and then let's get into that capital structure thing and when the time's right.
Mate, no, I think that's that was excellent how you covered it, and I just wanted to give some background to anyone that might not sort of understand what we're talking about here, and it's that there's been a big I guess evolution is probably a good word. An evolution of the strategy business model over the past year or so. So last year we had the convertible bond method, I guess, of levering up and buying Bitcoin. And some people have complained that our leverage is just not high enough now, and and the reason people buy a Bitcoin treasury company is because it's a leveraged bet on Bitcoin. So why on earth now would you buy strategy given that its leverage ratio is a lot lower, because we've issued so much equity that even though we've actually issued a lot of preferred securities, like our ratio is still low. So I think like the best thing I can do is like, no, investors aren't wrong, right? So if investors have that view and that's why they buy or don't buy, they're not wrong. That's just why they buy or don't buy. So all I can do is sort of share why I'm still bullish and why it's only made me more bullish these developments in the market. So obviously I was already bullish on MSTR last year, and since then there's been so many bullish developments. I think the biggest one is the acquisition of 400,000 Bitcoin. Right. And I think it's easy to get caught up on the idea of financial leverage, isn't it? Or thinking of, so there's a meaning of leverage in terms of, how much debt a business is using. So that's one way leverage is defined. But there's a broader use of the word, which in more means how exposed are you to the increase in Bitcoin price. Now, that's much more than just the financial leverage. It's to do with your market position, right? So if you've got a much more dominant market position, you're more exposed to Bitcoin price rise, regardless of how much debt you have, right? So what I mean by that is Strategy is massively more exposed to Bitcoin, or more leveraged in the broader sense of the word, because we bought a ton of Bitcoin, right? More specifically, right, this change of using the convertible debt, and now we use the preferreds. I think you did a great job of summing up why it's good to use the preferreds. I think the key context for people to understand is it's all about the scale, right? The only reason our leverage is relatively low compared to last year is because we've issued so much equity. And so the first thing is to realize what a success that is. And I did a post the other day. A lot of people might have seen it. It was comparing the amount raised from the MSTR ATM to the biggest IPOs in history, and it's comparable to the biggest IPO of all time. So the amount MSTR has raised at the market by issuing MSTR is equivalent, roughly, give or take, to the largest IPO of all time, which was in 2019 by Saudi Aramco. So we Strategy issued so much equity, and when you do an IPO, you don't go, oh damn, we did this huge IPO, what a failure, we've diluted the shareholders. Because what are you trying to do with the IPO? You're trying to raise as much money as possible, right? So I think IPOs give the proper context when analyzing the MSTR ATM. So the first thing is to look at how much equity we've sold or issued, and realize it's the most successful capital raise of all time, basically. So that's the first thing. Now, when you've done the most successful capital raise of all time, it's gonna be hard to lever up because of the scale of how much equity you've issued. Right now, even though we've broken records, or Strategy, has broken records with the preferred IPOs this year, because of how big the common equity issuance was, it's still small, relatively speaking, right? So even though the preferred IPOs were so big, like the Stretch IPO, the biggest in the year in the US, so it's massively successful. You can't really hope for something to be more successful than the biggest IPO of all time, right? So we've been extraordinarily successful of adding leverage. It's just that the leverage amount is small because of the enormous issuance of equity capital, right? So then it really comes down to, do you think that massive issuance is bullish or bearish? And again, this comes back to just business basics, right? It's like, why would any business raise money ever if it was a bad thing to do, right? So fundamentally, the idea that raising lots of money by issuing equity is bad is false. Raising money in business is a good thing, right? Like, that's why businesses do it, and no business can start unless you raise money, right? Like, that's just a given. So it all depends on how you use the proceeds of the raise. So everyone in the Bitcoin treasury space should agree that Bitcoin is a good use of proceeds. So we have to give Strategy a tick. So all they've done is raise money, and they bought Bitcoin, tick. So then it does come down to, is it accretive or dilutive? And again, people try and sort of act like you can call it dilutive, even though it's accretive, and that is just wrong. It's wrong at a technical level. Right. And it's kind of a silly argument. It's like, if you've sold, whatever it is, 25 billion, $30 billion of a product, why would that be a bad thing? Or like, if you've raised $30 billion and you've used that to buy a good thing, why would that be bad? Like, the only way it can be considered bad is if you don't think Bitcoin is a good use of the proceeds. But if you don't think Bitcoin's a good use, then, I'd say you're in the wrong industry. So it kind of baffles me, because like, when I look at what Strategy's done, I'm kind of thinking, what were you hoping for if not to massively increase our Bitcoin accumulation rate? So for me, it's like, what I wanted Saylor to do is what he's done. I want him to figure out how to get as much Bitcoin as possible as quickly as he can, and he's done that. He sold $25 billion of common equity, and he's innovated these amazing products that no one had really considered before. And he's sold record-breaking amounts of those as well. Like, what possible performance could be superior to what he's already done? Like, I think a lot of it just comes down to ignorance, or the idea that it's a bad thing to raise money in a business. And, like that's just wrong. You can't, it's difficult to even argue with, because, you have to come back to the basic axioms of business. Like, is it good for businesses to raise money or not? Like, fundamentally, yes. Right. Like, because that otherwise you can't start a company. So, raising money isn't bad. Anyway, mate, I'll leave it there, bro. I'll leave it there on that. Cheers.
Yeah, great setup, because this is one of the other MSTR specific things that I wanted to talk about, was like this notion of dilution. I mean, again, you would think this is one of those things that like we would have all, as a community group, if the word community is always so cringe in how it's used, but you would think the group of us as a whole would understand the concept, or like the reason for the denominator of Bitcoin per share, right? The fully diluted, assumed diluted shares outstanding, ADSO. There's a reason why it's going up, right? It's because the numerator, the Bitcoin, is also going up, and the numerator is going up at a faster rate than the denominator. That's why we're doing all of this. But you'll see, like, I won't name names here, but you'll see like one of the regular True North contributors being like, oh, just complaining about dilution, or being like, oh, like the volatility's gone down because of like all the dilution, right? It's like you're missing the whole accretive part here, right? And this is why Saylor was so bothered by like the dilution, like this time last year, like the word dilution. He knows like which like buzzwords sound like really bad. Obviously dilution does, but even something like commodity, in certain industries, it's viewed as like a bad thing. It's, there's no money to be made there. It might be cyclical. There's nothing proprietary about it. But yeah, like this whole dilution thing, like the fact that people like don't see the bigger picture, or they just, I don't know, are thinking only the denominator of shares is going up. It's like also the Bitcoin's going up. So that point there, I mean, it's just one of those shockers that it's still floating around the lexicon. And then the other thing that you mentioned there, because it's really 2 points of what you were saying. It's the dilution misunderstanding, and it's also the leverage misunderstanding, right? And I think leverage has like different meanings depending on like how you're using it. But I think like in really any of the cases of using the word like leverage as it pertains to MSTR, really just brings us back to this whole like levered ETF idea, right? And it's like, oh, well, if there's debt on the operational company in the form of convertible bonds, then there's more leverage in the company, even though that's not exactly what people were saying. They're talking about like leverage in the price. I think that misses entirely like what I'm trying to say about like MSTR as a business. You know what I mean? Because if we just think of it like in the business sense, then we're not thinking of it in the price performance sense of like what like leverage is, and then how that manifests in the change of the stock price. So yeah, leverage and dilution, I think those are things that this time next year, you and I will be like, yeah, so we haven't made much progress on people like at large, generally speaking, understanding like both of these things and how it pertains to like, even the dilution concept itself should like negate the ETF idea, right? Because like ETFs don't dilute. They don't have equity ATMs, right? They're not an equity. It's an equity wrapper, but it's not like a company equity. So you would think in a certain way that each of these points would like bring people closer to like what I would consider to be objective truth, in that strategy is a business. You know what I mean? If you got anything else on that, please feel free to send it. If not the capital structure thing, we definitely got to go into that one.
Yeah, I guess I'll quickly touch on like the MNAV compression, because I think you know, and this might be quite helpful maybe if anyone's just starting out investing, because when I started my Bitcoin journey, if the Bitcoin price was low, I would see that as a good thing, right? Because I'd already developed conviction in Bitcoin, so the lower price means it's better value. And that's kind of how I look at strategy when the MNAV compresses, right? So we would expect, if you've got a volatile asset like Bitcoin, you expect there to be highs and lows in the market. It's kind of a given. So after we saw that like monumental run up last year, why would we not expect an MNAV compression after that? If we just think about normal market behavior. So if whenever you get a big run up in price, that's how markets work. It's called the boom and bust cycle. Again, like read The Alchemy of Finance to understand that. That's inherent, right? So you're always going to get runs up in price, and then and the harder it runs, the more often the harder it's going to come off after. So it's the same with MNAV. Like, did anyone expect the MNAV to expand steadily forever in a straight line? Was that anyone's expectation last year? Like, no one was saying that should or would happen. So why is it a bad thing if the MNAV compresses? Like, weren't you expecting the MNAV to compress after an expansion? And if you weren't expecting the MNAV to compress, like, why not? And what were you expecting? Just a steady MNAV at like exactly the same level? So when I see sort of the MNAV compression we got at the moment, to me that just screams like good value. Rather than it being some kind of issue, like, and if we look at like the peak to trough, it's not even that intense. You know what I mean? If we just look at the top of MSCR November, like where we are now, or even at the bottom, it's not that bad. Like, coming from a Bitcoin background, we had a 20K top in December 2017, and then it was $3,000 at the COVID bottom, 3 years later. So
Right.
after dealing with that, like having this sort of kind of mild price consolidation around sort of between 250 and 300 for MSCR, and MNAV coming down to 1, like that's I personally, I don't understand why people view that as like even a bad thing at all. It's like that, it's a normal thing in markets you get bull markets and you get bear markets. That's normal. And it's all to do with what's your conviction, right? So if you don't have any conviction in the asset, it's a bit like Bitcoin, right? If you had no conviction in Bitcoin and you bought a 20K in December 2017, why the hell would you be holding on to it when it's going down to 3,000 in 2020? Like, it's all about whether you've got conviction or not. If you've got conviction, then to load up the bus when it goes down to 3K. So, and no one can give you that conviction, right? So you either have conviction or you don't. And then that's how you then view the price in that context, right? So anyway, bro, sorry, bro, I just saw you know.
Sorry, yeah, I just gotta take a quick bathroom break. I'll be right back. You can stay there. You can stay there.
Yeah, 6. I'll keep everyone entertained. Hey, so
Oh, sure.
yeah, so yeah, that's kind of what I'm saying. So, like, if that's a good question, right? If you see someone bearish and they go, "Oh, the MNAV's compressed," it's like, well, what were you thinking the MNAV would do? So, like in my mental model, we're gonna see volatility in the MNAV. So we're gonna get periods where the MNAV expands, and we're gonna get periods where the MNAV compresses. But long term, I expect the MNAV of strategy to expand. And if you think about it, it's kind of similar to how generally Bitcoiners think about Bitcoin. Like, most people look at Bitcoin and they go, yeah, we know there's going to be volatility, or classically, we know there's going to be bear markets, but we're sure about the long-term direction of the asset. And therefore, if the price in USD is low, that means it's a good buy. And that's basically how I look at strategy. So I'm very sure of my long-term thesis. So when I see a lower price or compressed multiples, I just think better value, because nothing that's occurred has invalidated my thesis. If anything, the events have just strengthened my thesis, because my thesis is more to do with the total amount of Bitcoin that we acquire and how fast we're acquiring it than any other metric. So if your primary metric is the speed at which a company is acquiring Bitcoin in the aggregate, then, and we've seen this massive increase in how fast Strategy's been able to buy Bitcoin. So from my perspective, an investor, I couldn't be more bullish, because I've seen this massive increase in how fast we're buying Bitcoin, and I've seen a compression of the valuation at the same time, right? So me as an investor, this is an absolute dream scenario. And you've also got like the whole market in disbelief, right? And seemingly no sort of clear outlook on what's going to happen long term, right? So for me, I've got a very clear outlook. I think Strategy outperforms every other Bitcoin treasury company and Bitcoin long term, and it has an expanding MNAV long term. So because that's my thesis, and and I'm very clear on that, right now is a easy buy for me. But I understand if one doesn't have a clear outlook on that. So because I know some investors, they think long term all MNAVs of all treasury companies need to go to 1, right? So I know a lot of investors that have that view. So if I had that view, I probably wouldn't invest in treasury companies whatsoever, right? So the only reason I invest in treasury companies or specifically Strategy, is because my thesis is that the Strategy valuation in Bitcoin terms will go up forever. Which people might find that mad, but that's why I view MNAV compression as a good thing, because it just signals good value. Yeah, bro. So we can go to the capital stack next. Did you want to start that one?
Sure. Yeah, I think very well said there, by the way. And I think like how I was just saying, like leverage and dilution, these are kind of like regular talking points that come up. One of the more recent, regularly regurgitated like talking points has been really, I think what perhaps other people would think is like an overemphasis on the ranking of the preferreds as it pertains to their seniority in the capital structure. This is something that literally only matters in like a doomsday type event, like and perhaps doomsday is even like too serious of a phrase here, you know what I mean? Because it's something like it's something more like this, like 80% drawdown that you had mentioned and has been circulated about, like this is where like the pain points would be. That's really the only point in time in which the seniority ranking of the preferreds matters. So given that, right, it's like if someone has like the worldview that like Bitcoin and Strategy are like going to zero, then the prefs are like obviously off the table. The stock, God forbid, but even like the prefs are like off the table immediately. So like that person's like not interested, right? It doesn't work. Or if someone's like a Bitcoin bull or something like that, or at least whether they're a shareholder of Strategy or not, they don't have that like Armageddon view of Bitcoin. If that second person who's like more open-minded to Bitcoin and Strategy, if they're overly like focused on the capital stack, the seniority, it's like, well, like why? Like at a certain point, it's like, why are you so concerned about this, right? It's like the analogy that I use to try and like help get this point across is like John Rockefeller. A lot of things come back to like the refinery example and that great business slide, but like when John Rockefeller starts like Standard Oil, like would it be like a reasonable like discussion to be like pestering him about like, well, what if oil like goes to zero, right? Like what if, you know, another energy source or something like comes out overnight, or like what if, you know, this Armageddon scenario happens? It's like, no, 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 no. I'm absorbing that risk. Like that risk that you're like describing here, I'm long that risk. Like I am willing to like deal with the life consequences that may come to me if I am wrong about this whole like oil thing. However, comma, I have like a just relentless bull conviction on the use case of oil today, but more so in the future. In the future, I think there'll be, you know, an economy that's driven on energy, on oil and gas. Like that's the bet I'm making. So that's where it comes back to that like second person or second investor type, more open-minded to Bitcoin, more open-minded to strategy. It's like, why would you spend so much time analyzing the trade-offs of the capital structure, and even suggesting that like one of the prefs like Strife or something is now like more valuable than like MSTR? It's like, no, 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 that's not the way to look at it. It's really like a binary decision tree on a flow chart. Like it's just one diamond. It's like one decision diamond shape. It's like, are you bullish on like Bitcoin or not? If you're not, then like the prefs are like obviously off the table. If you are bullish Bitcoin and strategy, then it just doesn't make sense to be so overly focused about the trade-offs and the this and the that with the seniority of the pref stack, because one has to absorb that John Rockefeller oil might fail. One has to embrace that that way of thinking, that approach, or else why are you in Bitcoin in the first place? You know what I mean? So it's one of those interesting things that can really be simplified down to like one binary question, and then it's, you know, easily understandable on both sides of that diamond.
Yeah, that's a good summary. Like I think one thing that we have to consider is how the design of the preferreds draws attention to the downside, and even the features, right? So let's think about some of the investor protections on the preferreds. So this concept of cumulative dividends. So the genius of Saylor is that he's taken a sort of a doomsday scenario for the stock, which is this situation where we might have to, well, it's not doomsday, but it's a very bearish situation, right? So Saylor's said that we would only have to suspend dividends if there was, I believe, an 80% drawdown, and then at 90% things get a bit more serious. Something like that. I'm butchering that, but there we go. So what the cumulative dividends do, so in this scenario, it gives strategy this power to suspend dividends on certain products. And then some of the preferreds, like Strife, they have this provision where they just keep getting added up. They're cumulative, and eventually you get all your dividends, right? So straight away, that's like, it sounds really good, doesn't it? It's really appealing. It's like, oh, wow, I get cumulative dividends. But really, this is actually an incredibly bearish scenario. Like you don't want that scenario to occur whatsoever. Like in the scenario where there's these cumulative dividends being paid because there's been a missed dividend, probably the prefs are like trading down pretty bad as well, right? So it's like, it's a good thing. It's Saylor's managed to turn cumulative dividends into a feature, but really it's a feature that appeals to people that are very risk averse. So, and that's why I think the prefs are so clever, is that Saylor's managed to monetize bearishness, right? By selling products with these features that make sense to bears. Like if you're a bull, like Ryan or I, you go, cumulative dividends, who cares? That's probably not going to happen. And that's because we're bullish, right? it's not wrong to be a bear. Some people are just bearish, right? They might be risk averse for whatever reason, or they think, you know, Saylor's made a bad move or whatever. So they're more bearish, and they think there's a possibility for things like missed dividends, and therefore features like cumulative dividends are quite interesting. Probably also good to touch on this concept of the moving liquidation preference, because I think that is like this boogeyman, you know, and I think it's quite reasonable to, you know, I saw Dan say the other day when you sort of tagged Dan, and Dan made a really good point, which is these are novel. Like, this is not normally how preferred equities work. So this moving liquidation preference, and like, you know, from my perspective, I don't claim to be an expert on moving liquidation preference. I don't think there's one moving liquidation preference expert in the world, because this isn't a thing that was really done before, right? And I think what I always come back to personally is, I think it's funny, the idea that Saylor would have released a product that is like this boogeyman for his own company. It's like, it's hilarious. Like the amount of due diligence that a team like Strategy would do before releasing anything, and then even like now they're still issuing more of it. So if it was like this dangerous thing, you'd probably stop issuing it, right? And you know, Saylor's come on record making it quite clear that all the preferred equities are complementary, reflexive, and synergistic. So they all benefit each other. But I think the reason why that's confusing is that it's because of the nature of the products, because the products are designed to suit investors with different views. So naturally, they're going to be appealing to people that don't necessarily have the same bullish view on the company, and that's why they're so clever. And that's the only way for this, I guess, this risk curve to exist. So you have to have some kind of feature that creates the risk curve, right? Otherwise, there would be, if Strife didn't have interesting provisions or features that made it worth paying more for, like, why wouldn't you just get Stretch, right? Or why wouldn't that the difference in the price between the two just be arbitraged away? So you've got to have a reason for people to pay a higher price for something like Strife and to get a lower effective yield, and you do that by having these provisions that look quote unquote scary or make the security attractive for some people. Because if there was nothing to make that security attractive, then why would anyone buy it? Or the product wouldn't exist in the first place, right? So you have to put in these bearish provisions to create the risk curve to a greater or lesser degree, and create the yield curve, right? So I think that's the important thing to remember about or financial planning in general, is that there is no right or wrong, because you always have to come back to the individual and their own risk tolerance. So there isn't a correct risk tolerance, and therefore there isn't a correct financial decision objectively. There's only the subjectively correct one. And then what Saylor's done so well is he's monetized that. You know, he's monetized the fact that there isn't a correct decision, and it's subjective, and he's catered to every need using Bitcoin to deliver a superior product for each category of investor. So you're always going to get this, I guess, this tussle, which is deliberate, right? It's the nature of credit. I did that post the other day, which I know you liked, which was drawing the analogy to a mortgage. It's like we understand intuitively when we get a mortgage from the bank that if we can't pay the loan, the bank gets the house. So why do we do it? Well, because if everything plays out well and property prices goes up, it means we've got leveraged exposure to the price increase, right? So of course there's risk, right? Of course there's risk. That's inherent in leverage, right? So it's all about what's the quality of the leverage, and Saylor's engineered the best quality leverage we can by not having to repay the principal and having infinite duration. So you really can't. There's nowhere up from there. That's kind of the best case scenario. So then it's really just a case of, do you want to take on some risk or not? And again, that's not wrong. If you don't want to take on any company risk, then there's Bitcoin. And Saylor never advocates for anyone to buy MSTR. He always advocates for Bitcoin. So Saylor's not suggesting that you should take on the company risk. That's just for investors to make up their own mind and think, okay, do we think that Saylor can apply intelligent leverage, as he says he can, and that will make MSTR outperform Bitcoin long term? I believe that he can do that, and I believe that's what he is doing. And I take a long-term view. I only first took a position in 2023, so it's not going to be until 2027 that I've crossed that 4-year mark, which is that's the sort of watermark that Saylor uses to distinguish between a trader and investor. Mm-hmm. That was also classically how people would, I guess, recommend thinking about Bitcoin. Like, if you're not prepared to sort of buy Bitcoin for more than a cycle, then you've got a sort of trader's mentality, and you're probably going to get burned because you're going to try and sell your Bitcoin on a dip. And I just find it amusing because I know so many people in the space of Bitcoiners, but yet it's so difficult to apply that long-term thinking to the Bitcoin treasury company space. And instead, everyone's thinking like traders, where it's got to be where this month-to-month price action is more important. Anyway, so I think it's always good to come back to that. Like, no one's wrong to be a bear. Like, no one's wrong to be a bull, because everyone's unique, and we can only do our own due diligence. We can't rely on anyone else's due diligence. So, and we've all got our own unique predispositions to things like risk. So it's not wrong for someone to value accumulative dividends, just like it's not wrong for someone to think that is a useless feature because we'll never see it. Right? It's just it's based on our own sort of outlook of what might happen. Anyway, man, thanks.
Yeah, I love that point there, where like someone's worldview like cannot be wrong because they're optimizing for their own worldview. And then that's where like markets get interesting, when you put all these like worldviews into a gauntlet of like Twitter, and just battle them out. Yeah, but the individual being bearish or being bullish, it's not right, it's not wrong, it's not even neutral. It just is. You know what I mean? So I think that's an interesting point there. And then to kind of wrap up the seniority, the preference in the capital structure, the big like meaningful takeaway for me is that like strategy is building out like the Bitcoin backed yield curve. Like that's like the not even the bullish view. That's just the like objective and constructive view here as to what's happening, right? We'll see if like other companies like are able to do this. Of course, Metaplanet's on that warpath. Asset apparently is too, I guess, but I think there'll be zero demand for those. And then it's kind of like this interesting game theory between strategy and all the other treasury companies. Like, are they going to try and like start selling preps themselves? I think some will, but I think what will ultimately be like most true at the end of the day is that like people are going to want to buy their Bitcoin backed preferred securities, like preferred fixed income securities, through the company, or they're going to want to buy them from the company that has the most Bitcoin. Like I think at the end of the day, that's going to be like the simplest way to approach this. Plus, then there's obviously the Saylor premium, where like, this is where it comes back to like everyone else paying deference to the king. It's like you've got all these smaller like, Bitcoin treasury companies all paying that positive deference, because it is beneficial like in their like selfish, incentive structure, but it benefits, strategy. And as time plays out, like I just think strategy, to the extent that there's market demand for these types of products, I just think MSTR ends up being the gold standard, or shall I say the Bitcoin standard for, Bitcoin-backed perpetual fixed income securities. So that's all I got there. What else we got? Did we have any errors, omissions, things that you wanted to get to earlier? If not, I'm gonna do a couple questions here.
Yeah. No, yeah, that closing point I think is I'd like to just emphasize that because it's such a simple mental model for how one might value Bitcoin treasury companies against each other, and so I think that's why sometimes it gets rejected. But you can literally have the idea that the more Bitcoin you have, the bigger multiple you deserve. It's so simple, right? But it's kind of straightforward. If you think Bitcoin is a good thing, then obviously having more is better, right? And as you said, then the securities that are backed by the most Bitcoin should inherently have the most value. It's a really simple idea, but that's basically how I'm investing. And then yeah, I love this point around deference to the king and I think it ties into that other point, because if you think about it, all of that is marketing expense, right? And that cuts into margin. So if you're cutting into your margin, you can't offer as high a yield on your securities. You've got to keep it as lean as possible. So if you look at a lot of these other companies that, like I say, they're effectively promoting strategy, which expands our margin at the expense of theirs. So yeah, it's really compelling. And I think it's warranted, that sort of view of the market, because there is such a massive gap between number one and number two, and because that gap has only widened this year. So we've seen this influx of competitors into the space, but we haven't seen the gap close whatsoever. It's actually just got a lot bigger, right? And so if you had the thesis from Quant Bros, which is, hey, this looks like it's a new tech monopoly. It looks like Google for search or Meta for social. Strategy is the Bitcoin one. It's going to be the new big tech, but the Bitcoin big tech, right? So if you're like me and that was your thesis before 2025, and then since then, you've seen an influx of competitors, but you've seen that lead expand. Well, all that's done is, solidify my conviction, is all I can say. And it's made me much more certain that having that, I guess, outlook that the company with the most Bitcoin will be able to offer the best quality Bitcoin-backed securities with the lowest cost of capital, and therefore have the biggest margin. It couldn't be clearer to me. So I was kind of sure of the thesis last year, man, but now I'm certain, like beyond any doubt, right? And so that's sort of given me the momentum to found BitStrategy and really, stake my flag down under, so to speak, to the strategy banner, because yeah, the writing looks like it's on the wall. And that doesn't mean people shouldn't have a go, right? I think there's going to be great companies built. I know a lot of people recently, with the, Mike Alfred coming into Strive, have been quoting that Saylor clip where he's like, Strive can be $100 billion company. But in my mind, don't get it twisted. I think the question is, does Saylor think strategy is going to outperform Strive long term? That's the question I like to phrase to myself, right? So Strive might do incredibly well. I have no comment whether they will or won't. But what interests me is long term, is strategy going to outperform Strive, right? That's what I care about as an investor long term. And if you look at the market structure, it's hard to see how they won't, given the massive head start and this situation we've got where the rivals need to orbit strategy and effectively promote it. It looks very difficult, doesn't it? It looks difficult. So it's difficult to see how such a business would outperform strategy long term. I think they might do very well, but it's hard to see the long term thesis relative to strategy. That's how I look at that. Yeah, man. So thanks for letting me get that last bit in. Cheers, bro.
Yeah. Yeah, I think you closed on something really good there in that like it's not to say that there can't be like other like significant companies and whichever path they choose as a Bitcoin company, right? Like a pure play, like a micro strategy or like kind of like a hybrid or a company that's like dipping their toes in the water. I recently saw a graphic that showed this and like how aggressive they are in the Bitcoin strategy. It's not to say that the other ones cannot be successful or cannot do like other cool things, right? Maybe things that we're not even thinking of right now. We're kind of focused on talking about like the prefs and like those sorts of things, but maybe, one of these other companies will do something great and like that's awesome, right? But the I'm with you in the sense that like the bull case for strategy for me is just the clearest of the bunch. It's the highest value creating one of the bunch. It's the one that I think is the most durable and can last the longest. It's the one that has the most mind share and but yeah, it's not to say that others can't do well. It's just that this is my favorite of the bunch, and it's like you got to put your money somewhere, right? Or you could choose to keep it in cash in the bank, but at the end of the day, you got to own something. Let's say if you're an investor, you have to own some type of assets. No pun intended there. So yeah, you and I are very much aligned on that point as far as like strategy with having the most Bitcoin, with not needing to do the marketing spend or any of the excesses there. They just get a ton of free marketing. They should have the highest credit rating on their securities. Hence, like they stand to like still even from where the market cap is today relative to other like smaller market caps, they still stand to gain the most potentially, right? If we're right. And the other thing there about like market cap asymmetry and like the base effect math of like the starting points, it's like, look, a lot of these companies just like aren't going to make it, and maybe a lot is like is too much, too aggressive, but like, do you think like next year, 2 years, 5 years from now, we're even like Naka even still exists? You know what I mean? So like that's like the other thing here too is like you look at something like Semler and like the price really had languished like for some time, and then like they like took the path of like being acquired, and so there is all of this kind of absence of durability. There's an absence of track record. There's an absence of commitment level. There's a lot of absences and uncertainties in the other one. And this is just one of those like fascinating like topics to like keep like to keep peeling the layers of that onion back.
Yeah, yeah, man. Could I just chip in? It's like because I always like to compare it to the internet, and I go, is the story of the internet that everyone wins, or is the story of the internet that some people win disproportionately, right? Or power is going to consolidate into a giant single entity. That's kind of the story of the internet, right? We've seen that with e-commerce and Amazon. You've seen that with social and Meta. You've seen it with search and Google. It's the nature of digital leverage and capital that capital wants to find a winner because it's more efficient. Like it's much more efficient. It's much more efficient for one entity to have a lion's share and then back digital credit with the lowest cost of capital so it can offer the best quality products versus lots of entities trying to do the same. Capital's going to converge and find the winner. It did it with Bitcoin as well. Like, it's a big reason Bitcoin won. Like Saylor talks about this a lot. Is that I love that quote. He goes, "All the smart people in the world decided Bitcoin was the winner." And I think some people don't like that because they want it to be about. It's just about the tech, but it is also about that decision or like collectively capital deciding no, it's that one. And I think we're going to see the same thing. I think the price action kind of already shows when it's clear. I think that the differential treatment of strategy shows the winners clear. So unless people think that Bitcoin's going to, play out very differently to all of the other sort of tech monopolies that exist, and I'd like to hear a realistic thesis as to why power wouldn't consolidate like more, or the lion's share of returns are going to consolidate into one entity. So to me, that seems pretty clear. But again, it's like, a lot of this comes from listening to, if you listen to early Saylor when he talks about his tech investments, he's very clear about this sort of this process that tech monopolies exist. Capital sort of consolidates, and it's ruthless if you're not the winner, right? And I think sometimes people get confused because he's also a Bitcoin advocate, right? And the two things can coexist, right? So you can, it's fully true that it's better for every business to adopt Bitcoin relative to not having Bitcoin, but that doesn't assure anything of the business. It doesn't say anything about every other element of the business, right? So of course businesses can still fail or adopt Bitcoin and not do well. And the reason I love strategy is not just because it has Bitcoin, it's because it's the team that figured out to do it, right? Strategy is the team that figured out to create the Bitcoin treasury movement, and no one else figured it out. That was Saylor and co. So they're not just Bitcoin. They're the team that figured out how to apply Bitcoin to business. And that's what I invest in. And of course, Saylor can't say that directly because, he can't promote his own stock, and he's a Bitcoin advocate first and foremost. But I'm a strategy investor, so I can say why I invest in strategy, and I invest in them because it's the best team in the business. Like, right. if there was anyone, like, shout out to LaDoja, by the way, that was such a good hire from strategy. I thought hiring LaDoja, like, LaDoja is someone that was just hustling for the company, like building things, building these AI models of all different sorts, churning them out, and it was a great hire. Or if you look at some of the other hires to the executive team that you never hear about, that guy Brian Brooks, I think it is it Brian Brooks, who's the ex Binance exec. Like, you don't see that guy going around doing podcasts, but he's just this really high level exec in the background. And if you think about it, like, if there was anyone that Saylor or thought was going to result in treasury company success, he would have hired them for strategy, right? And because he was in the position to do so. So to me, it's not saying anything about the caliber of the people at the rival organizations. Like, I've got a lot of time for people like Dylan LeClaire, Simon. I think they're brilliant operators.
Yeah.
But I think, Saylor had that opportunity to put together the best team in the world. And that's what strategy is. It's the best team in the world. Like, why wouldn't it be, right? Do you know what I mean? Because who doesn't want to work at strategy first and foremost, right? It's the number one company in the industry. Saylor sort of said the same thing about how hard it was with staff with the rival tech companies, right? Like, why did anyone want to work at MicroStrategy when you can work at Microsoft? Right. Sure. It just doesn't look as good on your LinkedIn profile. Right. And so it was a nightmare for Saylor to retain talent. Well, it's not the same situation now, is it? Like, working at strategy is the number one place. And that's why I think it's so impressive that LaDoja got that role in engineering, because it's the number one place to work in the Bitcoin treasury company industry. And that's only going to go, it's going to accelerate from here. So yeah, I'm just incredibly bullish on strategy. I welcome the competition though from the rival companies, and I hope they all do really well because it does lift the Bitcoin network. But I just think there's such compelling reasons to be bullish on strategy relative to everyone else. And yeah, so that's where I'm gonna put my capital. There we go. Cheers, mate.
Yeah, well, credit to you, because you were saying this even when Metaplanet was at like a 6 MNAV. You were saying, well, Strategy's going to have the highest credit rating because they have the most Bitcoin, and because of that, like they should actually have the highest MNAV. And I agreed with you. I just would not have thought it would happen this fast. Like the rest of the MNAVs took like a really serious compression, and Strategy's really holding its own, hanging in there, and climbing to a higher MNAV than some of these higher flyers. And of course, shout out LaDozier. Very, very happy for him as a person, and I agree with what you're saying. I think it was a great business decision, a great hire to bring in someone who's that legitimately motivated for the right reasons, right? It's not like some slimy dealing or something like that. No, it's like honest intentions. Like, LaDozier traveled across the world and went on an America tour for both Strategy World and Bitcoin Vegas. And took a tour of America in between, because each thing was like a month. It was like Strategy World, then a month, then Bitcoin Vegas. So he just stayed the whole time, and met up with so many Bitcoiners and MSTR people, and it's just awesome to see. Like, I'm happy for him. I'm happy for Strategy that like we brought these two worlds have been brought together. So yeah, man, great stuff here. One of the questions I want to ask, and we can touch on this. We'll do a couple of these, and then look to wrap up. But I'm gonna go from like what's most recent, and then like work my way up. Chuck B, how about the Strategy preferred distributions being return of capital versus a typical dividend? This is something that I just saw for the first time. I forget which interview Saylor talks about this. If it was the Scott Melker, like that Wolf of Wall Street's guy, or like another very recent, or maybe it was the Mark Moss. It was either the Mark Moss one or the Scott Melker one, where he explains like the advantageous reason of this being return of capital and not like a traditional ordinary dividend. So I only just very recently even was made aware of this. I don't have too much to add on to it, other than just saying like it is good what Saylor is suggesting because of the tax treatment with a return of capital versus an ordinary dividend. And I know this might be getting a little dicey because of the MSTY debate that's like still kind of hanging on there. About like people not liking that MSTY is like mostly a return of capital type instrument, but that's a completely different, like it's an ETF, it's a synthetic, it uses like options. There is no, like, I think they might be holding some MSTR as of recent. I saw a press release, but it's mostly not that. It's just selling calls, puts, stuff like that. It's a synthetic. So for the purpose of that, the return of capital is just a totally different thing than what Saylor is saying, in that even though the wording might not be like great or what people want to hear, it is actually in the investors' like best interest for the purpose of like an operating company to do return of capital, because then the individual investor benefits from the tax treatment of that, instead of it being treated as ordinary income, which I believe typical dividends are. So that's great, but that's all I know about it. Do you have any thoughts, insights on this bit strategy?
Yeah, it was one of those things, man, where certain things just happen and they almost feel they're so serendipitous, or it almost feels like God is on our side or something. And the reason I say that is there'd been this massive criticism of Strategy, of the method through which we're funding the dividend payments. So as that was the basis of the we spoke about it on the last episode. A lot of the accusations of it being Ponzi like, right, were to do with how we're financing the dividend payment. So rather than using operating cash flow, we're issuing more securities, so it's financing cash flow, and we're funding dividend payments with that. Now that was a criticism, and yet Saylor with the team have now actually revealed, oh, you that thing that you thought was bad, oh, it's actually a tax advantage, and it
Right.
means that the effective yield that you're going to earn on these securities is potentially even higher and more attractive. So it's this it's similar to the monetization of the bearishness that he's achieved with products like Strife, right? It's another example of something that seems like it's a negative actually becoming a positive.
Right.
And I think there's, it's kind of similar to the business model as a whole. So tax efficiency is sort of baked into the strategy business model from the ground up. And, it's funny, like sometimes people look at like operating income like it's the holy grail. I look at that, oh, I just see a tax liability when I think of operating income, right? Like it's much more interesting to me as an investor having massive financing cash flows like we achieve when we issue our Bitcoin backed securities, because there's no tax liability that gets created. And what I love about this return of capital, treatment on the dividend payments is it's a similar thing from the investor's point of view, right? It's like it's giving it's giving a tax advantaged structure, or making a tax advantage structure available to investors. So yeah, I mean, obviously, it's just fantastic. Again, it's not going to help those sort of too good to be true complaints though, because it's like, oh, hang on a sec. So you're raising all this money tax free, and then you're paying income to investors, and a lot of that's tax free. It's like
Right.
it just feels like another layer of too good to be true, or I think some people will interpret it like that. But again, it's not. It's just to do with how tax law works. Is that you pay tax on certain things, and you don't pay tax on others, and that's key. It's both key to financial plan, is key to personal financial planning. So thinking about your tax liabilities from the outset is critical in personal financial planning, from my experience, and at the corporate level in business design. So both in business design and personal financial planning, you need to think about tax from the outset. And not only is strategy a tax efficient business model, it's created tax efficient products as well. And it's, I like, as I've, the audience might know, I'm a former chartered accountant, and I'm, a geek. So I really like tax law was one of my favorite subjects in uni, which I think would bore most people, but I find it really interesting. So when I see, tax efficient structures as an accountant, that you look at that like it's beautiful. To me, a tax efficient structure, or things like this, the potential treatment on these dividend payments, it's a thing of beauty, right? it's literally beautiful. And hopefully it will be appreciated. I mean, it's just so hard. It's so hard to argue with, isn't it? It's like, oh, you know how these rates, which are already better than anything you can get in the market, and you already couldn't find a bank account equivalent that's paying 10%. Well, add another 3% to that, or whatever the case may be. It's like, so I think where a good point to close with is what Saylor highlighted, which is you might have the best product in the world, but unless you can sell it, it doesn't really matter. And he also sort of, I quite like that framing for the Bitcoin treasury company and space in general. A lot of this is just a distribution game or a sales game. It's about how are these companies going to issue as much credit as they can, and that is a sales game. It's distribution. So Saylor's already created products that are so good. It's almost like the problem with the products is that they're too good. They're so good it causes cognitive dissonance, right? And that's tricky. And because obviously, if you go up to someone and you say, "Hey, do you want this thing that sounds too good to be true?" It actually creates resistance to adoption sometimes if things are too good. So I think the big question I'm trying to answer for Bit Strategy is thinking about that, that distribution piece, like what role can BitStrategy play in that distribution? Obviously, forming this startup is one. So, by becoming a buyer of the preferreds, I'm hoping to help in part with the distribution of digital credit, right? But I think that's that's what to think about with this return of capital. It's just like layering on another level of too good to be true, I think, for some people. And so we've got to come back to, okay, we know we've got the best products, but how do we actually get them to people? Or how are these products going to be distributed? It's that question that keeps getting asked. It's like, hey, who has a bank account? Would you like a 10% bank account? And everyone puts their hands up, right? But how many of those people then went from that meeting in front of Saylor and then made sure all of their liquid funds are in a pref, right? Probably not all of them, and they've probably left a lot of money in a standard bank account, right? So designing the products is one thing, and then the gravity does part of it, but it will be helped along by people thinking about distribution. Like, the way I think about it is that there's this opportunity for every bank in the world to simply white label these products, right? They could on one end you buy the prefs, and on the other end you fund a new customer facing product. So your customers don't know anything about strategy. You're just using those securities to fund the cost of the products to your customers. And banks around the world, think of all the banks around the world that could right now just start funding their savings account interest using prefs and just collect that fat margin. So why are they not doing that? Well, it's just because there's huge amounts of bureaucratic red tape to get things done in big institutions. So I know a lot of people in the industry are doing a lot of good work to try and break down those walls. But I think that's how to frame such a good feature like this one we've seen in the product. Is like, it was already the best product in the market, wasn't it? And then we hear about return of capital, and it's like, huh? It's like, even better again. It's like, okay. Anyway, man, cheers.
And it's one of those things, like I love what you're saying about, like, it seems too good to be true and how that's like potentially a problem, but at the end of the day, it's not a classic like too good to be true, because it's just highlighting the corporate advantages that individuals don't have, right? Like, when we were doing the convertible bonds and borrowing money at 0%, like, that was something that individuals just can't do. So it seems too good to be true. And then now with this, the ability to pay the dividends and then even raise the dividend on stretch at the height of, like, questioning around, like, how are they going to pay the dividends? I know you posted about this. It's just like, it's just brilliant. It's funny. It's all of these things at the same time. So it's not even that it's like too good to be true. It's just that, like, there are like huge advantages that a person's never going to have that a corporation does, whether it's borrowing costs or tax treatment of the ways that it conducts business. Let's do a couple more, and then I'll let you get out of here. We got to get to bed at a certain point too. But one of the things that's really jumping out in the live chat is who said this? I got my main computer up here so I can't see. Iger. I don't think this has been addressed all that much. The earnings call, I don't know if it was the most recent one or the one before that, where they said I think it was the most recent one that we had, that we're not going to sell, Class A common ATM to buy Bitcoin unless our MNAV is 2.5 or above. And then at like a 4 MNAV, like, we'll sell a lot. That slide. And then, like, 2 or 3 weeks later, we were, hitting the Class A common ATM in order to buy Bitcoin. My quick thoughts on that, and then I am actually gonna have to run to the bathroom a second time. I'll let you share your thoughts on this. My thoughts on that is, there's a lot of different ways that, like, this could be interpreted, or like things that we could say about this. I think the primary thing that I want to say is it goes back to what I was saying about the evolution of the business. And through this experimenting and through this time, there's information that we all get. And of course, like strategy gets information as to how does the market respond to these things when, the executive chairman and Long Fong are, putting these kind of, not guardrails, what's the word, but just putting this like, forward guidance out there and then adjusting it or refining it. And it's that, I mean, there's a chance here that like that was just to put that idea out there to see how the market responds. I was very much of the mindset that they were going to follow through with that and not sell the Class A for the purposes of buying Bitcoin. I understand why they did then a couple weeks later, buy the Bitcoin, but I think it gets dicey when you call your strike price, you know what I mean? And that's a phrase that gets thrown around with like if a president was like, we're gonna buy oil at this price and just puts it out there like publicly, it's like that's could get very problematic when like calling your strike price. And that's kind of the same thing that strategy is doing by trying to draw that line in the sand at the 2.5. So what I hope on a go forward basis is that we don't have to draw the line in the sand and be like, these are the these are the steps that we're going to take like at each of these like MNAV levels. You know what I mean? And I just hope that we can like keep like running the business as is like most recently designed, where hopefully we don't have to keep hitting the Class A common ATM for anything other than using those proceeds to fund the dividend obligations on the backside of the prefs. That's what I want to have happen. Like that is the most accretive way that we can gain Bitcoin, not just in the Bitcoin per share terms, but also in the growing of the business, right? It's like we need like, more and more education in order to lead to more and more adoption of the prefs, but we need the growth of the prefs, right? That like there is like the risk here, the risk here in the share price of strategy, MSTR, is that the prefs like never grow. And in fact, not only do they not grow, they actually decay from here. Like the prices, the share prices of the prefs like collapse. No one else buys any more of them. Like that's like the risk. That's the potential like failure here. The opposite of that is success, and like the big idea of strategy being a dominant player in the global fixed income real estate investor market. And I throw real estate in there, and I've said this before, but I throw real estate in there because a lot of the real estate that's owned for the purpose of renting it out and like just getting that cash flow every week, month, whatever. That's basically a fixed income product, right? I would argue it's worse than like a U.S. bond, because you have all the physical domain risk with real estate, and you got the tenants, they might destroy the place. And you have all these other like risks that you don't have in a traditional bond. But yeah, so real estate for the purpose of renting is essentially a physical domain fixed income product with a lot of risk. That's why I group global like sovereign bonds, all the countries' bonds, and real estate into the same bucket. So like the goal for strategy as a business would be to be like a dominant player in the global fixed income real estate. These are the largest TAMs, total addressable markets, like on planet Earth. And I'm not just talking about them being a big like Bitcoin, like being the biggest Bitcoin, digital capital issuer. I'm already baking that in as like it's a done deal already a done deal now. I'm talking about being like a major and major is subjective, but being a significant player in the global, like largest TAMs in the world, like that's the upside bull case. So I hope that we can just keep the Class A common ATM for the purposes of funding the dividend proceeds, and that we don't have to like use it or worse, rely on it as a way of like adding Bitcoin to the balance sheet. Those are my thoughts on that. I got to run just bathroom real quick, right back. But bit strategy, what are you thinking on this?
Yeah, cool, man. Let me keep you. I can talk on this for a little bit. So, I firstly shout out to Eager. I think if it's the Eager that I think it is, he's an OG of the space, but doesn't get a lot of love often. So, shout out to Eager. Cool question. Yeah, it's like it. You know, I get why some people are upset with the guidance changing, because you know, maybe people had trades on, or you know, they might have you know, the price action might have affected them. So it's not, you know, I get it if someone's upset at that change of guidance, fair enough, because obviously it's not particularly consistent. So why wasn't I upset by it, or why am I bullish? I talked about this a bit last time with Ryan. One, I view it as a good thing to issue equity to buy Bitcoin. I see that as kind of fundamental. It really got popularized, the idea that that was somehow a bad thing, while we were doing it. But you know, like I say, when the dust settles and you compare it to the largest IPOs of history, and we managed to issue more equity than the largest IPOs in history, you know, in my mind, is clearly a success. So these, and you know, I didn't personally, I didn't want that pressure being put on Sailor and Strategy while it was all going on. So I felt like the online community was, you know, creating this narrative that somehow issuing equity was a negative for the stock price, which of course there's a logic to. You know, he's issuing it at the market, so you know, of course there can be an impact on the price action from that, like a first order impact on the price action. So then it was, you know, it's really thinking about, well, what's the second order effects, or so there's the day-to-day price action, but then how does Sailor's actions affect the price action 10 years from now? And in my mind, like any Bitcoin that we leave on the table negatively affects our price action 10 years from now. So I always come at the equity issuance as a fundamentally good thing. Why? Because if we weren't doing it, we wouldn't be getting all the Bitcoin, right? Or as much of it. Like we've managed to buy so much Bitcoin primarily because of the MSTR ATM. I get the idea that it's not as accretive as the prefs, but if it's a trade-off between having an extra 100,000 Bitcoin or not, I'll always take the extra 100,000 Bitcoin, right? Because as it should be a given, there's only a finite amount of Bitcoin that can be acquired, right? And the competition for that Bitcoin is going to get more and more intense. Obviously, it's going to drive the price up. But as I always say, Bitcoin accumulation is a zero-sum game, and that always scares people. But it's, you know, it's just a mathematical fact, right? There's a set amount. So a Bitcoin that's owned by Strategy can't be bought by anyone else. So, and I think that finality is always missed in this conversation when we're thinking about, is the ATM a good thing, the common ATM? Well, where's the consideration for the finality of the market structure? Like Saylor talks about the digital gold rush. It's not a permanent fixture that we're always going to be able to acquire this gold. At least that's not the model that Saylor approaches the market with. He's been very clear. He views it as a digital gold rush. He's said specifically that you should buy Bitcoin before there's none left for you to buy. So if you start thinking about it like that, then his actions make perfect sense, right? He's explained why it's accretive. Bitcoin per share goes up. Even if, you know, MNAV is very low as it is now, I'm not even opposed to him hitting the common at these prices, You know, MNAV is still positive. It's still an accretive transaction. If you think about it, like a really nice example I like is like, okay, so say you could raise $1 trillion at an MNAV of 1. So say you could found a company and you could raise $1 trillion. So you get a dream investor, you know, and he goes, I'll invest $1 trillion, but only at a valuation of MNAV of 1. Like, would you not take it? Like, or would you take it and then you'd have $1 trillion company? Right. And, you know, you might have one investor, he's the major investor, but now you're the head of a $1 trillion company. Right. So was it bad for you to issue that equity and buy the Bitcoin? So I sort of look at it like that. Like, as a lot of people probably know on the call, I have a thesis which I call terminal accumulation theory, where it's basically like the formal articulation of some of these things that I feel Saylor hints at. So, you know, when Saylor says buy Bitcoin before there's none left for you to buy, I feel like everyone else goes, yeah, good one, mate. But I go, oh, okay, no, he's serious. He's serious about that. Like, we better buy Bitcoin before there's none left to buy. And there will be a point where there's none left for us to buy, right? So, and the reason I think that's useful is because then the common ATM makes complete sense. It's like, oh, yeah, okay, that's why you should rapidly issue $25 billion of equity and buy it all, because that's a one-off opportunity. Like, who else can raise money and buy Bitcoin at those prices now? Like, you can't do it. Like, the opportunity to do so at those prices is gone. So should he have not done that? Yeah. So to me, that's the first thing, is always framing the common ATM as the massive success that it is. And, you know, I'm always happy as long as there's Bitcoin left to buy and it's accretive to the shareholder. We should be issuing equity, in my mind, because at some point we won't be able to, and at the very least we won't be able to at these prices. I'm sure everyone can agree with that. So even if you don't agree that there's a terminal accumulation point, so if you might believe Bitcoin will always be available for you to buy, but you probably agree it won't be available to buy at these prices. Right. So there's only a window where, you know, the sub $200,000 Bitcoin can be acquired. So every day that we don't issue equity, we give that opportunity for someone else to swoop in and buy that sub $200,000 Bitcoin. And I want that to be us that buys that Bitcoin. And so that's why I'm a massive proponent of the common ATM. And I think it's always important to come back to that fact that it's the most successful, like, capital raising ever, right? Basically, like, and so it should always be viewed in that light, that it's a positive. But then, you know, obviously the prefs are fantastic for the common shareholder because they're more accretive. You know, so, like, you know, absolutely, like, we basically want to do both, right? We want to carry on issuing accretive common equity transactions, and we want to also issue prefs. They're all good products because they all result in more Bitcoin per share, and we've got a finite window to do this in, right? So, you know, always come back to that Saylor quote where he goes, all of our products are complementary, reflexive, and synergistic. Always remember that. Like, never let anyone convince you the common ATM is a bad thing. If they think it's a bad thing, they're saying they're a Bitcoin bear. Like, technically, it's technically saying that you're a Bitcoin bear, right? If you think the common ATM is a bad thing, because you're basically contradicting Saylor's idea. You put it really well earlier. Like, just strip it back to basics. We think Bitcoin's going up relative to the dollar, so you should always get more of it if you could do so in an accretive fashion, so that the shareholder ends up with more after it. It really is that simple. And yet, because of this, I feel poisoning of the discourse by traders, some of whom have been, I think, now outed, which is a really good thing for the space. So, you know, I think it culminated with Saylor blocking Mandel, and I think that was a bit of a turning point, wasn't it, in the sentiment shift, because suddenly everyone went, oh, okay, maybe it was a load of rubbish, everything that Mandel had been saying all that time, and maybe it wasn't true, right? And I think for most of the year, a lot of people had been maybe given a lot of weight to Mandel's arguments that the equity issuance might not be a good idea. And I think that's what resulted in that pressure on strategy to, oh, should we issue above this amount? Again, like just to close, like I would have liked as a shareholder community for us to fully just get behind strategy to issue equity to buy Bitcoin, because it's a good thing to do. Like, yeah, anyway, cheers.
Yeah, a lot of good points there. I do like Josh. I do like Josh. I've learned a ton from him, so I don't even want to broach the subjects. I do really think highly of Josh. All things considered, I really do still think highly of him. But
he can be my enemy, bro. He's my enemy, not yours.
Yeah, we did touch on that too. All of the things we're saying is just specific to us, and we're not like forcing our views here on anyone else. We're just sharing them. But you touched on a lot of things there that I do agree with, and I think are great stuff. Number one, the MSTR Class A Common ATM, most successful. I forget how you phrased it, but like it is like the largest source of Bitcoin that we have on our balance sheet, meaning the proceeds that have come from the equity ATM have, delivered the most Bitcoin to the balance sheet. Plus, what you said there about like price and everything else, it's like it brings to the forefront this like question, or really rather this realization that if we were going to do an equity ATM for the purpose of buying Bitcoin, it absolutely makes sense to do it most aggressively at the beginning of the journey, right? This is where a long-term mindset in terms of like decades, this is where it becomes so abundantly obvious, right? Especially because strategy's kind of a narrative here about like what you and I were saying, Bit Strategy on the we have the most Bitcoin. Because of that, we're going to be the most respected, and will be the most credible, so to speak, institution to sell the Bitcoin yield curve. So because of that, and because like the monopoly story of like having the most, and the moat that's created of having the most Bitcoin, and like the irreversible nature of this action, it just further stresses like the reality that like we have to be aggressive buyers in the beginning, right? And I still think like we are in the beginning, but like what was done, the past 12 months of equity ATM for the purposes of buying Bitcoin was incredibly important, right? In order to like not only like further establish that like lead, but like also like widen the gap, like you said, between us and between everyone else, because it seems like a great part of our like credibility and the irreversible nature of this is that like we have the most Bitcoin of any like functional entity, so to speak. Like, how has like a million, or like how Satoshi has a million or like 1.1 million coins. Who else? I like the ETFs have like a million coins, but again, that's not like a single point of ownership. Even the firms like the BlackRocks themselves, there's literally no ownership there. It's all the individual people. So that's two. And then it's strategy, right? Like none of the countries have more Bitcoin. Obviously, like, you can add up all the companies and like double it, and like strategy has more than that. So yeah, like to the extent that people like understand the value creation of the equity ATM, it absolutely makes the most sense to be as aggressive with that in the beginning because of the price dynamics. And I think that's all I got, my friend. I see Josh like the Jack impression. My Elon Musk impression is never good. It's like electric cars are the future, and I do SpaceX and the rockets, and by the way, I deserve $1 trillion. See, I break character immediately, but Elon asking for like $1 trillion pay package, that's one of the most obscene and like grotesque things I've ever heard in my life, and I don't say that in a positive way. I mean, this guy's just like, he's on Twitter nonstop. He's tweeting on Twitter nonstop. That's all he does. But then he still expects, he's overthrowing like global governments from Twitter, and he expects $1 trillion from Tesla. When 2 weeks ago the market cap was $1 trillion. I mean, it's crazy. I wish I could have done that in his accent, but that's kind of my silly thing to kind of close wrap here. What do you got, Bit Strategy? What do you got? Final thoughts? Anything you missed that you want to touch back on? Or should we go for 6 to 8 hours? I think 3 hours is a good stopping point. I gotta, take the dog out for a walk, and then we're gonna cuddle and fall asleep.
Yeah, bro. Like, yeah, it's been good, hasn't it? It's flown. I think this is our longest one so far. Yeah, and that's the problem. I could I was on a call with one of my fellow strategy investors. Shout out Zed, and I think we spoke for like 5 hours yesterday, and we were like, we got to end this call, but it's just because it's so compelling, and there's so many different things to talk about, isn't there? Especially if you're involved in the space as well, and the social media stuff. So much to talk about. But closing note for me, guys, is just to I'm sure everyone will, but just make sure you tune into the strategy earnings call. Is it tomorrow? 31st.
Tomorrow. I think it's tomorrow.
Tomorrow, isn't it? Yeah, it's 30th today in Australia, at least. So 31st tomorrow. Make sure you tune in. It's going to be fantastic. Shout out to Adam Livingston for making the panel. Shout out Ben Workman on the panel as well, and Pierre Richard. I think that's, it's a lot of fun, isn't it, having these Q&As? And it's also, I just saw today, I don't know if you've seen, mate, how Adam Livingston got that. He's got the Bitcoin for Corporations badge, and he's an official contributor along with Peter Dewan. So I thought that was just really cool, seeing that, like a couple of guys in the space having that collaboration with Bitcoin for Corporations. So that's awesome. Lots of love to everyone in the space as well. Again, pleasure with everyone, even though sometimes we disagree on things, but it's always fun to come back the next day and see what's going on in the markets. So yeah, thanks Ryan for having me on, bro. And I hope you have a good rest of the day yourself.
Yes, sir. Thanks for being here. And I was saying tomorrow for earnings, but that's actually today in my time zone. So yeah, because I think it's 10:30, not 10:31. I'm nearly certain it's October 30th. So yeah, key question here. Do you wanna hop on with me after earnings and just get right into it? No pressure, but I'm gonna be on. I'd love to have you with me.
Oh well, mate. Yeah. How could I refuse such a nice offer? Yeah, and there's a standard standing thing where I'm always, I always want to talk to you and other strategy investors. Always looking to collaborate with other strategy investors, and so if you're a strategy investor, feel free to send me a DM. Always nice to speak to more strategy investors. So yeah, bro, 100%. So I'll just have to check my calendar though, and check what time that is, but I'm pretty flexible. So yeah, let's do it, man. Cool.
You are the glue. You, sir, are the glue that holds this band of characters together. I tell you what, like the voice of reason, the one who's pulling the band together, the one who's supportive of everyone in their respective areas as they, do what it is that they do for the sake of Bitcoin, for the sake of strategy. You really are the glue that holds everyone together.
I don't know about that, bro. I feel like I'm more of like a side character. Hey, I'm definitely not the main character. I'm a side character. I'm a support dude. So no, that's really, really nice of you to say. Like, I had a really nice comment from Skeptical Shrink earlier as well, and he was like, "This guy is the best." So shout out Skeptical Shrink. But yeah, I think everyone, you know, it's such a cool industry because there's so many really interesting people, loads of smart people in the space. And yeah, I wouldn't say, you know what, it's like, it's just the I'm sure on my thesis. You know what I mean? So it's easy to feel like I'm a glue because I'm just really sure on my thesis. So that's why I've got this consistency. It's why I'm not jumping over to another company or wanting to get a job somewhere or anything like that. Is the only reason for that is because I'm really sure on this strategy thesis and I want to double down on that bet personally. And that's where the positivity comes from as well. Is just because I'm excited, right? I'm genuinely excited to talk about strategy. You know, obviously I don't get paid to do this. I don't need to be paid to do this because I actually enjoy it. Like, you know, and but I love the whole corporate hustle as well. Like I used to, like I say, I used to be that guy putting on a suit. Like I love that lifestyle. Like working in the bank made me feel really good about myself as well when I had that, you know, had that title. I got up to senior manager. You know, I'd look at my LinkedIn profile every day, thinking what a great job I'd done. And you know, so I love that. And then when I became a self-retired investor, man, that was hard. And I'll be honest, like a couple of years in, I started thinking about going for a job, not because I needed one, but just because I didn't know what to do. It was like that thing in Shawshank Redemption, where the guy gets out of prison and he hates it because it's all he's ever known and he doesn't know how to live normally, right? And that was what it was like for me leaving my corporate job. Like first couple of years, I was kind of lost. But what gave me the structure and sort of the best of both worlds was this shareholder activism behind Sailor, because I feel like I've kind of got a job, but I don't. Like I decided to like treat it like it was my job, even though I'm not being paid. And like the idea was, well, I am being paid. Like I've got my shares, right? So, and that's how executives get remunerated anyway, isn't it? So like, you know, really at the highest levels, you more have equity compensation normally if you're a good exec, or that's what you want. So I was like, you know, why not just do that on the front end, take a big equity position up front, and then just work my ass off as if I actually work for this company. And like, because in the bank, and sorry, I know I'm waffling again, bro, I'll just leave it at this, but like in the bank, my job was being a business analyst, right? So as a business analyst, you don't ask like what you should do. You have to like work that out. You know, you've got to work out what is the thing that needs doing, right? If you're a good one. And then you go to your boss and you're like, hey, we should do this, or like, look at what I've done. I've done this thing. So it's like, it's exactly the same as what I do now. I don't need to speak to Sailor or get him to tell me what I should do, because I'm trying to add value. Maybe I don't always achieve it, right? But I'm trying to add value by, you know, working out what I should do. So yeah, that was kind of, hopefully that made sense. It's like, if anyone hasn't read the book Skin in the Game by Nassim Taleb, you got to read that one as well. It's in the Bit Strategy reading list, so you can find it there. But you got to read that book, sorry, because it explains why you get this massive asymmetry from aligning your capital and your work fully. So you know, you don't necessarily have that as an employee. And so that's why I'm so enthusiastic, is that I feel fully aligned, right? So all my capital's aligned in this thing, and all my my labor capital's aligned as well. And like I say, I've told you guys the whole year I've been here, I'm here for the long term. I'm building Bit Strategy to be something that lasts after I die. So the idea is that those perpetual preferreds are going to pay indefinitely, and we can use that to fund things like financial education and all sorts. So this really is a lifelong thing for me. And so that's why it's good building connections with everyone. You know, I consider everyone in the space a friend, and it's, you know, of course we're going to disagree on things, and there's money riding on it. And so of course things are going to get heated. But at the bottom of it all, it's just love, isn't it? It's love, and Team Bitcoin at the base of it all. So hopefully we can all view this layer of competition on top of Bitcoin as a good thing. It's a good thing that we compete, and it's a good thing that we have different views, and it's all good for Bitcoin. And let's just have fun along the way. Cheers, bro.
Right on, my friend. Well, thank you for an epic conversation. Thank you for the audience, for people who care to watch, especially because I know how much other stuff there is out there that people could be watching, and it's either the podcast, the other live streams, or like an audio book. You know what I mean? By the way, I love that book, Skin in the Game. Talk about, like, aligning the incentive structures and such, and being able to put your all into something. And that's the great thing about this space, is that, like, we can, like, massively disagree with a Nassim Taleb type character about, like, his thoughts on Bitcoin, which, by the way, he wrote the first forward for the first edition of the Bitcoin standard. So it's just so fascinating to see that, super bold, then bear. But even with that being said, there still is a ton to learn from these folks out there. And there's a reason Nassim Taleb is as famous or infamous as he is. So yeah, there's something to learn from everyone. I love what you have going on, Bit Strategy, in terms of this, like, really applied real life example of shareholder activism, right? And that's, like, through you, like, not only doing it, like, through your own posts on Twitter, but actually forming a real life company for shareholder activism, for the company that you feel like most aligned with. So between that, and then between us being able to, like, feel like and operate like owners, partial owners of this company, I think that ownership idea just ties in so well with shareholder activism and everything else that we have been doing for, years now. Like, it's not many, but it's plural. So with that, I gotta make sure the dog doesn't have to go to the bathroom. We got to wrap it up here tonight. But thank you so much, everyone, for watching. Thank you again, good sir, for the conversation. And we'll see everyone tomorrow after earnings. That'll be a fun way to just start getting our thoughts out there, like, while they're still hot. So thanks again, everyone, and we'll see you tomorrow.